All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live, and it looks like we are ending out the day relatively green. S&P 500, 658. It's actually pretty close to the highs that we got today at 659.72, so it's not too bad. 658.38. Over the past couple hours, we had a bunch of different headlines. The main headline being the Trump 1 p.m. speech, which ended up going for like an hour and a half. It was his address to the nation around what is happening in terms of the update for the war. And so we are going to watch a few of those clips and see what he said. There were definitely some interesting moments, to say the least, from that press conference. But it was enough to instill confidence in the markets. Even with crude continuing to pump, we are still seeing crude WTIs at 112.77. So we didn't go down on the day. We are down from the futures spike last night around 115, which is good, but obviously still above 100 is not the best. Block is up 1.6. Fintech's having a great day. Roku's up 0.69. SoFi, not too bad, holding on to about a 2.5% move. Robinhood above 70. You have Micron up 3%. The S&P against 658. Rocket Lab 68.17. Amcor having a great day. AXTI, not sure why this is down 21%, but this stock is up like 3,000% over the past year. So not that crazy to see it take those swings to the downside, but that one is down 21%. AEHR hit a new 52-week high today, 51.86. I think this is a new all-time high, 17% up in the day. They have earnings tomorrow, another small cap, $1.5 billion market cap. So after earnings, we're going to see how that one does. VG, also kind of a weird day. VG's up 9%, which is good for people who are long natural gas. Kind of weird that the market is up with VG being up. The VIX as well, I think, is still relatively green on the day. It's not as green as it was in the morning. Yeah, VIX is up 2%. I mean, it was up almost 6% in the morning, then went red. Now it's up 2%. So it's kind of weird because obviously that Tuesday 8 p.m. deadline, pound share going red right there, is what the market cares about the most. But it's almost like Tesla also down 2.4%. It's almost like the market doesn't care about that deadline. If crude is up, the VIX is up, your natural gas plays are up, oil and energy is up, and then growth stocks are up as well. Like it's a bit confusing to say the least, but I think based on some of Trump's comments, which I guess indicated that the war is coming to an end. That's what the market's pricing in, and the market's moving on. People are also hedging. That's also very fair. That could be taking place right now. This is your heat map for the day. Again, pretty much green outside of utilities and healthcare, and it makes sense why utilities are going slightly red on the day. Same thing with healthcare, as they had a big move last week. But financials are up, tech is up, software slightly up. Some of the software names are up, some of the software names are down. Tesla's the most red out of all the Max 7. I think that's based on that JP Morgan 60% downgrade. But the guy who's been issuing these downgrades on Tesla has been doing it for the past 10 years. So maybe it's scaring investors again, but I don't know if that was the biggest thing to affect Tesla. But that one is still red on the day. Triple V, thank you for the super chat. What the heck is UYU? UYU currency. Where is he at right now? Uruguay. Okay, Mr. Triple V is in Uruguay. So there we go. I see. A lot of you guys were saying, "Where's Triple V?" I didn't know he was in Uruguay. I'm finding out with you guys at the same time with currency in UYU. I don't even know. Uruguayan pesos is what it's called. Okay. Thank you, Mr. Triple V, for the 7,500 Uruguayan pesos. There he is. For all those that have been asking, where is he? He's in Uruguay. I don't know why, but he's probably probably there for some reason. All right, so let's get into the Trump clips today. Some of this stuff, I'm not going to lie, is just pure comedy. Some of this stuff is pure comedy, but let's go through it. Here are a variety of the things that Trump ended up saying today at his press conference. Let's just go through all of them. So first was on Kim Jong-un in North Korea.
Notice he said very nice things about me. He used to call Joe Biden a mentally retarded person. Okay, so don't tell me about your stuff. Joe Biden, he said he's a mentally retarded person. He was so nasty to Joe Biden. It was terrible. Notice he said very nice things.
Okay, so that was Trump saying that Kim Jong-un didn't know how to deal with the Biden administration. Then Trump said he's going to be running for president in Venezuela.
We haven't heard that in, I think, maybe hundreds of years. Now, with Venezuela, And we, just so you understand, the people of Venezuela, they say if I ran for president of Venezuela, I'm polling higher than anybody has ever polled in Venezuela. So after I'm finished with this, I can go to Venezuela. I will quickly learn Spanish. It won't take too long. I'm good at language. And I will go to Venezuela. I'm going to run for president. We haven't heard that.
Obviously, Trump is joking right there, but he said he's popular enough to basically learn Spanish and go run for president in Venezuela. Then he was asked about Iran still charging tolls to get access through the Strait of Hormuz, and here was his answer.
Mr. President, are you allowed to, or are you willing to end this conflict with Iran charging tolls for passage through the strait?
Us charging tolls?
Iran.
What about us charging tolls?
Is that something you're considering?
I'd rather do that than let them have them, right? Why shouldn't we? We're the winner. We won, okay? They are militarily defeated. The only thing they have is the psychology of, oh, we're going to drop a couple of mines in the water, all right? No, we have a concept where we'll charge tolls, okay? I thought you meant us. Your question would have been more accurate if you said us. Go ahead.
Then this is what Trump said when he was asked about having a plan.
Well, I saw somebody said, oh, he doesn't have a plan. I have the best plan of all, but I'm not going to tell you what my plan is. You know, they want me to say, here's my plan. We're going to attack at 9:47 in the morning, and then we're going to do this, and then we're going to, and if you don't do that, they say, I have a plan. These people know what the plan is. Everybody here knows what the plan is. But well, I saw somebody said, oh.
And then this is Trump giving a little bit more details about that plan when he was asked about hitting civilian infrastructure 8 p.m. on Tuesday.
Gotcha.
You said that very little is off limits in Iran as far as targeting,
Yeah.
including power plants, bridges. You've mentioned those.
Very little is off limits.
Are there certain kinds of civilian targets, though? I'm thinking schools
I don't want to
or
tell you that.
hospitals that you
I don't want
would
to
say
tell you
is
that.
off-
We have a plan because of the power of our military, where every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business, burning, exploding, and never to be used again. I mean, complete demolition by 12 o'clock. And it'll happen over a period of 4 hours if we wanted to. We don't want that to happen. We may even get involved with helping them rebuild their nation. And you know what? If that's the case, the last thing we want to do is start with power plants, which are among the most expensive thing, and bridges. You saw the bridge one. We were very close to a deal. And then I got a call from Mr. Witkoff, Mr. Kushner, and JD saying, I think they're breaking the deal. I said, tell them that's okay. Don't worry about it. But tell them to look out their window and watch. And within 45 minutes, I gave the order to knock out the biggest bridge. I gave the order, knock out the biggest bridge in, I believe, the Middle East, but the biggest bridge in Iran. And within 10 minutes after I gave that order, that bridge was over. So do I want to do that? No. Do I want to destroy their infrastructure? No. It will take them 100 years to rebuild. Right now, if we left today, it would take them 20 years to rebuild their country, and it would never be as good as it was. And
So the question now, based on the rhetoric that Trump said today, which again really didn't affect the markets. I mean, he's talking about escalation. He's talking about look out your window. I'm going to drop bombs. All this stuff that you would think would shoot oil up to the moon, or at least get the market to be down. And the market's up. We're up 0.4% right here on the S&P. I think the market is saying we have two options. We either buy stocks and claim the assumption that there's going to be a taco, or that there's not going to be something super aggressive on Tuesday, 34 hours from now. At 8 p.m. Or there is going to be something that is much worse, and as a result, we have to be, afraid of buying into the strength. And as a result of that, either there's a high level of kind of head fake going on right now in terms of the market, or the market is straight up saying, no, we don't think Trump is that serious about bombing the energy infrastructure, even though he is describing that he's very serious and he would be willing to do it if it ends up giving them more leverage with Iran. He's referencing the bridge that he bombed on Thursday, which he even posted a video of. So it's not like he hasn't done it before. There is evidence that he's done it. The question is, will he go as far to hurt civilian energy infrastructure and have that be sort of the crutch that would hurt the Iranians. Now, the bigger headline today, outside of everything that happened at 1 p.m. at that press conference, which quite frankly, he didn't say anything that was that new. The most important thing that he said today is that the Iranians responded to the 45-day ceasefire deal that was sent last night. And they sent a 10-point proposal. And Trump actually said it was a significant step in terms of negotiations with the Iranians.
The ceasefire proposal from this morning.
I've seen every proposal you can imagine. More proposals.
Your final deadline is Tuesday at 8 p.m. Your final deadline.
Yeah.
If Iran does not meet your demands, Mr. President, are you willing to continue the war?
You have to watch.
Given your recent threats, are you committing to
It's an easy question. The answer is yes, but you'll have to watch.
What do you think is the latest proposal?
They've made a proposal, and it's a significant proposal. It's a significant step. It's not good enough, but it's a very significant step.
So they made a proposal. It's a significant step. It's not good enough. I actually think that comment was the most important comment today. Because, I mean, how many times have we been through this rodeo where we know that Trump gets on stage, he talks a big game, says a lot of stuff, very incendiary, makes everyone feel uncomfortable. But at the end of the day, there is some level of actual framework to negotiate that is underpinning all of his rhetoric. And that is what the market ends up having to react to when it happens. Now, the previous times that this has happened, whether it was Greenland or Liberation Day at the most extreme scenarios, the market got it wrong and it sold off stocks when it shouldn't have sold off stocks. Market's already down a chunk from that 690 level. Again, 630 is what we hit last Monday, which so far has been the short-term bottom. I think the market is just straight up saying, we do not believe that Trump is going to put boots on the ground, that he's going to bomb Carg Island, that he's just going to go take over the oil. As much as he says he thinks he should just take the oil, and the Democrats don't want to take the oil, but he thinks it's a good idea to take the oil. All of that is rhetoric at the end of the day. None of it is rooted in reality, which means essentially I think what the market is saying with this price action, unless all this price action is fake, as NVIDIA goes green on the day, is we do not believe there is going to be a large-scale set of attacks. And maybe it'll happen, and maybe the market's going to get dead wrong, and we're going to get a nice 3-4% down day once that happens, which I think is very possible to happen because I don't see a world in which energy infrastructure being bombed is good for oil, and the market just cares about oil right now. But if it doesn't happen, that's why you're seeing green across the board. I mean, even Bitcoin today holding on to its momentum. You got the most risky of risky assets. Look at Bitcoin, $300 away, less than $300 away from 70,000. Gold and silver as well. Gold flat on the day, silver up a little bit. I think the market just doesn't believe it. And as long as the market continues to not believe it, then yes, this is all priced in. The question is going to be, is the market right on that assumption that it is priced in? So that's what we got going on. We got some more headlines. We'll talk about it. Chris will be on in about 30 minutes. We'll get his thoughts on what's going on in the macro private credit. I think the Medicare, Medicaid plans are also coming out after the bell. So UNH, CNC, Elevance Health, all those, Oscar potentially could be affected. And so we'll see what those rates end up looking like. And we'll see the reactions for those names and discuss them more in depth. Monday, April 6th, 4 p.m., the stock market is once again closed. We have survived another day. We have survived another day as we end out kind of green, which is not the worst thing in the world. By the way, I forgot to show you guys this. I was going to show you in the morning, so let me do it real quick. It'll take 20 seconds. This was the first ever bell on the market open March 10th, 2022. This is very embarrassing to show, but nonetheless, here it is. This was March 10th, 2022, the day the bell made the stream.
The famous Amit market open bell. It is ready to go. It is waiting to ring once we hit. You ever know why it's 9:30? I never knew why it's 9:30. Like, why isn't it 9:25? It's just, or why isn't it 9? Like 9:30. And why is it not 4:30? Why is it 4? There has to be some logic behind it. I don't think it's totally
Dude, my voice sounds ridiculous. Like, I just want to punch myself.
Arbitrary. But there has to be some logic there. We're gonna see how in red this goes. 9:30 market open. The market has opened.
It was so bad, dude. It was so freaking bad. Like it was like it wasn't even a bell ring. It was just like that wasn't ringing the bell. That was just like dangling it for a little bit. Like it was. But anyway, if anyone wants to go watch that, I'll put the link in the chat. March 10th, 2022. Was your wrist okay? I don't know why I rang it like that. It is what it is. I literally watched it over the weekend. I was like, what was I doing, bro? Like that was just. Also, my voice sounds so different. Like my voice, like I don't know what it is about. It's not like there's something like I don't know. I guess 4 years changes your voice, but anyway, that was the first bell ring back in March of 2022, and the markets have only become more volatile 4 years later. S&P ends the day 658.94, up 0.47%. Nvidia basically flat on the day, 177.64. Micron, nice day, that's up 3%. Microsoft was flat on the day. The Qs were up 0.6%. Photonics names had a decent day. AAOI, that was up about 3.4%. Robinhood, 69.28. The big update on Robinhood was they are getting access to these white label Trump accounts with partnership for Bank of New York Mellon. So not really changing the story of the account of the stock in the short term, but obviously very good for them if they get those accounts, and they'll be able to onboard a lot of people onto Robinhood at a very early age. AppLovin, that one up 6.8%. We got an update on them. We'll talk about it in a second. They did get an upgrade from Wells Fargo to 560. Netflix also got an upgrade to 120. That stock was above 100, got rejected at 102, 98.93 on the day. Coinbase was up on the day. Nebius, I think, had a great day. Nebius, yep, 3.42%, not too bad. CoreWeave was down 1.5%, so CoreWeave went the opposite direction. Iren was up 1%. Marvell up 2%. Marvell, almost 52-week high. D-Wave was slightly flat on the day. I mean, it was a relatively strong day across tech and software. You had to kind of pick your choice right here. Amazon at 212.79, not too bad. Oracle was slightly flat on the day. Ethereum and Bitcoin were up. SanDisk, look at that, 3%. This thing was almost below 500 last week. Now it's back at 724. So still not a horrible day for the broader markets. Chad said I went through puberty. I guess so. I guess I went through puberty. It's kind of crazy though. If you guys watch the video and I start looking at prices, we have, Tesla's at like $100, Palantir's at $11.45. It's kind of crazy to look at those prices compared to now. MicroStrategy up. That had a great day. That was up. MicroStrategy 127, up 6.5% of the day. Airtest Systems, again, great day, 17%. And then you have Bitcoin at 69.6. All right, so that is what you got in terms of price action. We got a bunch of different headlines. Before I get into those headlines, what did people do today? The only thing I did was yesterday buy some Rocket Lab. Nothing too crazy outside of that, but very curious. Did people buy anything, sell anything, buy puts, sell more calls? Kind of how did we navigate the markets today as we started off the second week of April? You were scared your mom would kick you out of the note. My mom would be gone by that point, so there was no one in the house with me. It was so weak. It was just like dangling the bell. Like I didn't learn how to really ring the bell yet. Now we ring it, even though half you guys mute it. Now we ring it. All right, bought some Zeta, bought more Hood, bought more Vel, sold calls on Palantir and ASTS. Palantir did have a slightly flat day on the day. ASTS was green. Got Alibaba. That's interesting. I still don't get why Tesla. I mean, that downgrade, I guess, is your reason for why Tesla got hit. But Tesla right there, 352. I think I bought it at 357 in the retirement account last week on Monday. Whatever low it got to that day. Wow, it actually at 346 today. I did not see that. Goodness, this thing got wrecked today. 352 on the rebound. You got more Oscar. That was up. Grab actually had a relatively decent day. Well, it actually ended red. It was green until we got into the close. Again, I think Grab here is undervalued. It's just those oil prices in Southeast Asia are an issue. Look, ultimately, if you think it's cheap, you think it's cheap. And, I don't know how much more cheaper it can get, but the oil prices are the headwind uniquely for some of these Southeast Asian companies. But yes, I mean, they're expected to grow EPS 50% over the next 5 years, and half their market cap is cash. So I do think it's relatively intrinsically undervalued right here. AppLovin, again, on the upgrade, that's up 6%. Then Netflix was up as well. Some people said bought some calls on Tesla, Rivian, CleanSpark. Rivian right there, 1529. CleanSpark's interesting. I mean, they are not the premier AI HPC play out of the bunch. So that one I mean, we're just going to have to see if they can actually secure enough gigawatts of power or even megawatts of power to be able to meaningfully continue gaining progress. My weekly buys on Amazon, Nvidia, and the Qs. Yes, we will have Technical Tuesday tomorrow. Bought more SoFi leaps. I think SoFi is going to crush earnings. I don't know if the street's going to respect it. Tanner did post some photos of the web traffic on SoFi being absolutely on fire. So you're starting to see a lot more of that member growth and engagement. Question is, does the market believe their loans are bad? And, I think most people believe SoFi's underwriting is fine, but I guess we'll need another earnings to see if that ends up playing out. Yeah, AEHR, I heard a couple of people bought this today on an earnings kind of YOLO. Look, I think if they can put up a monster earnings, which they probably will do, the stock can do well, but it's also up almost 150% year to date. We saw this with Micron going into it. Now Micron's a much bigger company. It's not going to take a lot for Air Test Systems to go from 1.6 billion to like 1.9 billion, but it has run up a lot. So the question's just, will it continue to run even after they deliver a good earnings, as they do have, a pretty interesting spot in the AI supply chain bottleneck issues. Kanye West did sell out SoFi Arena, 80,000 people 2 days in a row. Kanye was able to sell that out. A lot of people said that he had damaged his brand so much that he would never be able to sell out an arena, and he did 2 days in a row. And from what I saw in terms of the clips, it was a pretty exciting concert. So definitely SoFi getting the brand recognition based on Kanye being there as well. Okay, so let's get into some of the other stuff that we got going on, because we got a bunch of different headlines, and we will keep going from there. Again, Chris will be on in about 20 minutes. We'll get his thoughts on what's going on in the macro, but seems like pretty much a lot of people bought the dip, and as a result of people buying the dip, a lot of people are agreeing with the market sentiment, which is that we don't believe that any of this is actually real, and we think there's going to be a lot more momentum than not in regards to what Trump is saying. This is a chart that I thought was really interesting. It's something I found out about today as well. The robo ratio in the context of put and calls. So this ratio tracks retail opening buy orders and options, with the current reading showing retail traders are buying nearly equal amounts of puts and calls at the same time. This ratio has doubled since December, essentially the put call ratio being closer to 1, which essentially means that you're not going to have a serious amount of options to the bullish side, the call side, that is outweighing the put side. If you look at the top 20 stocks that were traded in the options market today as well, as I pull that up, yeah, look at this. Tesla was number 1 today, 3.3 million. The put call ratio was 0.92. So 1.7 million puts or calls, 1.6 million puts. Nvidia was then number 2. Apple, ironically, was number 3. Apple usually is not in the top 5. But then you had AMD, Amazon, Micron, Meta, Intel, Netflix, Microsoft, United Airlines got up in there, Palantir, Google, SoFi, MicroStrategy, BM&R, which now has 4% of the entire ETH holdings. Space, Virgin Galactic somehow got into the top 20 today. Broadcom, AMC, which I think was up 10% on the day, right? 12%. I don't know why AMC was up 12%, but it was. And then you had Marathon. So you're seeing a similar level of calls and puts being bought at the same time, which essentially means people are hedging. And because people are hedging, it's likely not as exciting for the market to, be more rooted in the idea that it's time to flip. And, unfortunately, this is kind of just how the situation is currently playing out. Let's get another update on the Trump presser, and then we will get into some of the other macro headlines we have.
Today, as we heard from the president earlier in the briefing room for roughly an hour and a half, and we heard him alternating really between threats of escalation and talk of diplomacy. At some points, he was saying that he wanted to make a deal, that he thought the Iranians were negotiating in good faith, while at other times he was sort of reiterating that threat to obliterate Iran's power plants and bridges unless they agree to some sort of a deal by 8 p.m. tomorrow. Take a listen.
The entire country could be taken out in one night, and that night might be tomorrow night.
So couching his language somewhat there, saying it might be tomorrow night, but of course, clearly leaning towards the idea of further escalation. Now, he went on to tell reporters that part of the reason that his messaging was wavering in this way, or sort of straddling that line, was because he can't give the media his plans and say what's coming next, but also because he was saying relatively that the ball is in the Iranians' court. Listen to this.
Are you winding this down? Or are you escalating?
I can't tell you. I don't know. I can't tell. It depends what they do. This is a critical period. They have a period of, well, till tomorrow at 8 o'clock.
Mike, I'll note that earlier today, the Iranians formally rejected that idea of a 45-day ceasefire while a broader agreement to end the war was being negotiated. The president earlier in the day also called it a significant step, but not good enough. So much.
Again, the market doesn't believe this, guys. Every time Trump says that night might be tomorrow night, they have until 8 p.m. I mean, someone explain to me why markets are green when the president is threatening to bomb massive levels of energy infrastructure in a region that we're at war at, in a region that controls 20% of oil supply globally. How that wouldn't be a further escalation. Like, the market obviously doesn't believe that that's going to happen. Now, whether that's true or not, time will tell. But there's no way we should be adding hundreds of billions of dollars of market cap to the S&P 500 unless the market believes that, or the market doesn't believe that he's telling the truth. Now, again, maybe the market's got it dead wrong, and Trump is just so unpredictable that he actually is going to go for Carg Island and unleash this massive level of attacks. I mean, the Wall Street Journal a couple hours ago did make an article that, I'll bring it up right here, that shows how the U.S. is planning for that attack. But obviously the U.S. probably leaked it to the Wall Street Journal because they want the media to report that the United States is ready to meaningfully attack. But why are the markets green then? Like, that doesn't make any sense. Like, that's obviously going to be bad for oil, obviously going to be bad for increasing the level of volatility. Now, and it's also going to create uncertainty unless you are certain that Trump is not going to do this, which is what would create a more bullish outlook. So the details, as per this Wall Street Journal article, included military planners are preparing lists of potential targets to provide Trump with options if he decides to attack energy infrastructure. Trump said he would destroy all of Iran's power plants if Iran does not agree to reopen the Strait of Hormuz by Tuesday, which is tomorrow. There are many energy targets in Iran with a military nexus, U.S. officials say, and an energy source could be considered a legitimate military target if it has been used for military purposes, U.S. officials say, such as if it is being used to provide fuel for rocket launchers, which potentially could affect civilian infrastructure at the same time as well. But, the United States would justify it in the context of it being for the military. So markets bottom on bad news. That's a good point. I mean, and so far we have not hit those lows on Monday. So maybe this is enough bad news for the market to price in and for that to be the bottom. That is very true. I mean, historically, markets have always bottomed on bad news. But I would imagine the market does not think this is going to happen to the level that people think it could happen. UNH is green, 4%. Okay, we'll have Chris come on in 15 minutes and explain exactly why they're pumping. I would imagine the new rates that were announced today for the healthcare companies, which today was the day that they were supposed to be announced after hours, they were probably more bullish than not. Who's in UNH? Put in the chat if you are still holding UNH heavily. Wow, S&P closed with just 36 million shares traded. That is 60% below the average and lowest volume since February of last year. That's kind of crazy, dude. Actually, that goes to my point of the market being, the market's green, but the market's also green because it's like people aren't really sure of what Trump is going to do. And you're just seeing lack of participation today. Lowest volume since February of last year. It's almost like the people that bought shares today are the people that believe that Trump is bluffing. And everyone else is just sitting on the sidelines and is like, you know what, you could believe he's bluffing and I hope you're right. But if he's wrong, then we're going to get a chance to buy the dip. Maybe that is potentially the reason why we're seeing the low volume today. UNH up 2.4%. 2.4%. Only green because people aren't selling, not because they're buying. That's also a great point. I mean, that's also a great point. How many people are actively selling right now? I think maybe it's, put in the chat if you're like legit liquidating your portfolio. I don't think that's the majority of retail, although retail is definitely getting a lot more bearish. We've seen that through the short ETFs rising, put call ratios rising, the premium for puts going up. XLK is the most shorted it's been in 10 years. So retail sentiment in terms of single stock trading volumes were down substantially in March, and we saw that in Robinhood numbers as well. So it's not like retail is uber bullish. But then you have retail getting ready to pay $2 trillion for this SpaceX. That's the confusing part. It's like, okay, retail's bearish enough to not buy Meta at 18 times earnings, but they're willing to ape into Anthropic. It's very confusing. But I think the majority of people are still holding, not necessarily net selling, which is why maybe we're not seeing that much pain to the downside. But yeah, that's what you have right there in the context of UNH, as that's getting a spike now, almost 4%. Let's see if that can break through 300 today. It has not been at 300 for about 2 months. It'd be very nice to see if it can get there. Memphis is not selling out entirely, but I took some profits today. I think that's fair. Obviously, I know a lot of people are still selling their calls. 660 would be nice to see on the S&P. Decent amount of people here own UNH. So it is nice to at least see UNH getting some momentum. Artemis 2, do you guys know they're live streaming Artemis 2? There's like 800,000 people that were watching the astronauts in the rocket make the lunar flyby. Let me show a clip right here, but that was pretty crazy. The fact that we have the technology to beam that stuff back to Earth is just incredible. Oh, wow. I think they're showing the moon right now live. Yeah. So this is the image that the astronauts are seeing in real time. Yeah, there they are in real time. They were doing an interview with the astronauts a while ago as well. It's pretty freaking cool. Just makes you like inspired for humanity when you see that type of stuff. So there you go. They are flying by the moon. I know some people don't believe the first moon landing was real, but this one feels a little harder to fake. So it seems like that is playing out. Tesla, here's the update on why Tesla took a hit by about 3% today.
From 43, also cut it for 26 and for 2027. In writing his note to explain his concerns about Tesla, or the concerns investors should have in Tesla, Ryan Brinkman writes, we continue to see large 60% downside to our $145 December 2026 price target, and advise investors approach Tesla shares with a high degree of caution. By the way, a 60% drop from 145, which is their target, would bring the shares down to $87 a share. Take a look at Tesla deliveries. We talked about this last week when they reported the Q1 deliveries. They were down 14.4% compared to the first quarter of last year, or excuse me, from the fourth quarter of 2025. So it was a 14.4% decline quarter over quarter. As you take a look at shares of Tesla, keep in mind that we will get the first quarter results on.
So again, that JP Morgan downgrade, I guess that was enough. I mean, Tesla was at almost 370 this morning, so it kind of avoided the downside momentum, but ended up by the end of the day getting hit to around that 350 level. UNH 301, baby. It hit 301.71, a nice 7% move. The Medicare rate hike for private insurers in 2027 has been finalized at 2.48%. 2.48%, which equivocates to more than $13 billion in additional payments. The agency, the CMS, will also keep the 2024 MA risk adjustment model and exclude most unlinked chart review diagnoses from risk scores starting in 2027. Humana is also running. Do I have the healthcare playlist? I do. Let me add Humana towards this, and CNC and Elevance. So ELV, that is up 5%. CNC is up 3%. Humana is up 10%. UNH up 7.7%. Wow. What about Oscar? Oscar is also up about 2%. I think Oscar still has to deal with the ACA subsidies being extended for them to get more clarity. Moderna, Pfizer, Novartis, Eli Lilly, Teladoc, Hims, not really benefiting from any of this. 302 on Mr. UNH. 303. That's some good news in a long time for UNH. It's been a while. Last time she was hitting the 300s was January 27th. And that's when it was falling from 354. Wow, this stock had normalized the 350s all of January. And then it fell to 255 at the lows. Now it's back to 302. Clover's up 8%. That's right. Clover was also up on the day. 303. Hims is not up after hours, but Hims was up during the day, 6.2%. ALHC Lyman Healthcare, that's up 11.35. All right, so if you knew that new rate was going to come out today, it seems like it was bullish enough to at least get the market to be a bit more excited. Polymarket poll, $190 million of volume. This is kind of crazy. Wow. U.S. forces will enter Iran by April 30th. There's a 99.6% chance on 98 million of volume, and there is a 99.7% chance by December 31st that U.S. forces enter Iran. Goodness, you got a lot of money betting that there's still going to be more momentum in terms of this war escalating. Yes, Buffett still does have UNH. That is correct. He still does. CVS is up 7% as well. Yeah, 99 feels like a little too much, especially when Trump is saying every day that we're going to end this soon. An Iranian source to CNN, we want to end the war, but not within the timeline that Trump is seeking. Iranian source to CNN, we provided additional guarantees in the letter we handed to Pakistan. So again, the big update this morning was that the Iranians sent a letter to the Pakistanis with a 10-point form of a framework to negotiate with the U.S., which was a response to that 45-day ceasefire. UNH now 306, as that's up 9% after hours. And it looks like an Iranian source to CNN just said we provided additional guarantees in the letter that we handed to Pakistan, but we are not fully aligned with what Trump is saying, which is normal, but still bullish because no two sides are going to agree on everything. But the fact that they are talking, I mean, that really is all that matters at this point. They can't just bend the knee. Yeah, they're not. I mean, there's just no way the Iranians can bend the knee that easily. I mean, they're going to need an exit strategy if they do want to bend the knee to make it seem like they're not bending the knee. And Trump definitely doesn't want to act like he's bending the knee. So you've got both of them going back and forth, kind of, trying to make an argument around how this is fully playing out. UNH making its move, man. UNH really freaking making a move. 309 right there. After hours. I guess this was bullish, or 307. I guess this was pretty bullish in terms of this new rate. That's what? How many shares outstanding they have? $1 billion. That's 25 billion they added in market cap. A little less, 23 billion after hours, based on this announcement. Again, Oscar, there was no update on the ACA subsidies, so I don't know how much this affects Oscar. It obviously affects them, but the subsidies are a bigger part of their business. That's up 4% though, so it's not bad. All the healthcare names: CVS, Oscar, Alignment Healthcare, Clover, CNC, Elevance, getting a bid. Yeah, Chris actually was supposed to come on 20 minutes ago, but he said to give him 20 minutes to analyze what's going on with these new healthcare rates. So once he hops on, we'll get his perspective on this. I think UNH is still a relatively large position for him. And, healthcare, fintech, SaaS, a lot of these sectors have just been depressed this year. This might be a catalyst to maybe revitalize the healthcare space as you finally have some clarity. 10% after hours. 10% after hours. Iran's top joint military command says Trump's threats are delusional. Very similar to what they said this morning. It looks like that's not necessarily changing. And, Trump said a bunch of things during the press conference as well today. So they're both trying to make their own claims. This clip by Trump, people will attach a lot of comments to it. It's 12 seconds. I'll let you guys hear it, and you can attach whatever comments you want to it, but the captions already have been quite incredible. Let me play it again from the beginning. Here we go.
They came in so fast and so hard, and these guys knew exactly what. Let's go. Come on. Get in. Let's go. Pwah. They came one right after another, not at the same time. They don't want to come at the same time. They had to come right after each other. They didn't have any room. They came in.
I think that's going to be one of those clips. That's that's going to be memed a decent chunk. Molina also up 7% after hours. Molina also up 7% after hours. This is a Burry play. So you got Molina also getting some love right here. I mean, what do we think, guys? Do we think he's actually going to attack? I'll do that poll in the chat right here. Do we think he's actually going to attack on Tuesday? Like, my gut tells me no, and the market price reaction, even though we had the lowest volume since February of last year, tells me no, he's not going to do it. But, like, what if he does? Lutnick to appear before House panel on May 6th. Lutnick to appear for an interview as part of Epstein probe. Oh, boy. Oh, boy. Does Trump actually strike on Tuesday? Dude, I was wondering why we haven't heard from Lutnick in almost a month. Like, when's the last time we actually heard from Lutnick? We've heard from Hassett. We've heard from Besant. We've heard from Rubio, Vance. We have not heard from Lutnick. And likely because I think the administration is trying to keep him away from the media because of the Epstein stuff. He had some very, explicit emails leaked about him planning to meet with Epstein after he publicly said that he never talked to him after 2005. And, I'm assuming there's going to be a lot of questions around what's going on there. UNH still making a move after hours. The broader S&P, this should be helping the Dow today. The Dow should definitely love what's happening to UNH. This is, I think, the top holding in the Dow Jones, if I'm not wrong. Dow Jones after hours, little bit of a move, nothing crazy. Up 0.3, which is nice. It was up 0.3 on the day. But UNH is one of the reasons why the Dow got hit back in 2025. Iran's top joint military command says Trump's threats will not make up for the U.S. humiliation and disgrace in the Middle East. The Ayatollah also came out today, or at least the office of the Ayatollah. We still have not seen the Ayatollah in person on video. He also said the exact same thing, that the Iranians will keep fighting and we are not going to, give up to the United States. So you have both sides still coming together, making the argument. And I guess the people that the U.S. is negotiating with are different factions in Iran, because the IRGC definitely don't feel like they want to be friendly with the U.S., but you have some other sides that are at least willing to talk, which is what I think the markets are pricing. And on top of that, you have the IPO markets that are heating up. OpenAI looks like they're ready to go public by Q4 of this year.
SpaceX is expected to make a record debut as early as June, reportedly going public at a $2 trillion valuation. It would be about $75 billion floated on the market, according to reports. But that is not the only mega debut expected this year. A source close to OpenAI tells me they are also preparing to list. That would be as soon as Q4, from what I'm hearing. They're actively meeting with bankers, according to this person. And then CFO Sarah Fryer, she's expected to make that call depending on market conditions later this year. So we will see on that timing. In the meantime, though, the company is pushing back aggressively on a report by The Information this weekend that Sam Altman, the CEO, and Sarah Fryer, the CFO, who I mentioned, are at odds over mega spending plans and then that timeline of an IPO. Put out a joint statement from those two executives saying, in part, we are fully aligned. They talk about durable access to compute being at the core of OpenAI's strategy. They call it a key differentiator for this company. A source close to them and those executives telling me they are, quote, confident about an IPO and demand, especially after raising $122 billion recently in private markets. In that process, I'm told investors did not balk at the $600 billion compute spending that is expected over the next 5 years or so. OpenAI is also focused on retail investor demand, as Phil said, similar to SpaceX. He got the Musk factor there, but OpenAI is also talking about it. Finally, Anthropic set to be the smaller of the three, but sources also tell me that is expected this year at some point, although the government lawsuit that we've also talked about could disrupt that timeline, Scott.
All right, Kate, thank you. That's Kate Rooney. Let's send it now to Christina Partsinevelos for
these IPOs are getting, I mean, like, I don't want to say it's a top signal, but man, historically, when you have these types of massive liquidity events, it ends up becoming a top signal. I think the explosive growth of AI is enough to justify the valuations and will, continue allowing AMD and Broadcom and Amcor and Nvidia, obviously, and all these companies, Oracle, to be able to continue to show massive levels of growth. And hopefully AI is just a different level of earnings growth that the market is able to price in. But these are hefty valuations, and they're going to have to be justified in some capacity. And if retail is the target for these, that becomes the bigger question. Is retail ready to buy OpenAI that's not profitable, probably will trade at a very aggressive multiple? Same thing with SpaceX and Anthropic versus Meta and Microsoft. Like, which one is going to actually capture the retail excitement? UNH still moving, baby. 9.95% as that is continuing to gain more momentum. A couple people are asking in the chat, do you think Trump's going to launch a nuke? I don't even want to think on if that would happen. My gut answer is no. I saw a few articles this morning written about it, on the potential that when Trump is saying, all hell will rain down and all this stuff, he's theoretically, it's not that crazy to assume that he's talking about a nuclear weapon. I do not think it's going to happen. I think it is an escalation of war that is not needed for what's happening right now. I think Trump, as crazy as some people may think he is not crazy enough to press the red button. So I do not think that will happen. I quite frankly don't think we're actually going to meaningfully attack. I think a lot of this is building it up, and I think that's what the market price action is showing you as well. If we do attack, I think the attacks will be much more targeted, and they will try to flex their muscles here. I do not think they're going to launch a nuke to the entire country. I mean, I think Trump knows what happens if he does that. Obviously, Russia is going to get involved. China is getting involved. Getting a lot of countries that are like, holy crap, we haven't used a nuclear weapon in 70 years. What's going on right here? So I really don't think that's going to be the case, but I understand people even questioning that it theoretically could happen. Okay, where is Mr. Chris Patel? Let me text him and say we're ready. Should be joining soon. We'll have him break down this UNH stuff real quick, and then we'll get into all the other macro stuff. He's been doing a lot of research on this private credit stuff. JP Morgan's Jamie Dimon came out and said some stuff about private credit today, which seems like the bigger issue that is actually potentially a bit more harmful for equity markets, even though JP Morgan's Jamie Dimon did say he doesn't think it's systemic, which is good to hear. But obviously that's not the best thing in the world if that were to happen. I think Trump is still bluffing. Yeah, I mean, look, I do. Well, I mean, the poll, 50 is literally 50-50 on this poll. Or 51% say no, 49% say yes. I mean, that just goes to show you how confusing it's been, right? Like the fact that 51% of you think we're not going to bomb, 49% say yes. There is not one side of retail coming to a conclusion on what's going on right here. It is very divided, very polarized in a variety of ways. Bitcoin almost at 70,000, which would be amazing to see. But it is 50-50. It is indeed 50-50, and I wonder if the market's going to also have that same 50-50 approach on Tuesday. What about Google on the SpaceX IPO? So Google will own about 120 billion of it. They don't have to sell it to recognize the gain in EPS, which is good for Google. But also it's like, well, if SpaceX collapses, then that Google EPS, if you're valuing Google based on their EPS in the context of SpaceX and the SpaceX equity declines, then maybe, maybe that SpaceX stake shouldn't be factored in as deeply for Google. Our tax dollars built up SpaceX with tons of contracts. Now we have to buy into it at a much bigger price. Too bad our tax money didn't go straight into equity. That's a hell of a point. SpaceX is one of the largest government contractors, or I should say defense contractors, because of launching stuff into space. They've been the best at it, at least in the private sector. And the U.S. does not have an equity stake in it, or at least, the U.S. people do not have an equity strike. He's striking on Wednesday without a doubt. We only talk about the U.S. striking. At some point, Iran has to strike. You would also think as well. Yeah, it's funny because, again, a lot of people disagree with that and think that there's no way he's striking. And then you have a lot of people saying there's no way he can afford not to strike. And so let's get a little bit of analysis right here. But as of now, the market is pricing in that he's not going to do it, which is why I think we've been able to stay green for the past 2 weeks.
But I don't like any kind of deadline stuff, and I don't like any kind of lack of information that adds to the volatility. But I think overarching, let's take 2 steps back, Scott. You use the term resilient. By the way, I want to pay a compliment. You've done amazing in this show, in the noon show, talking about.
Go ahead. Go ahead. Stop it some more. Stop it some more. Go ahead.
You like that, Kev? Talking about earnings. Earnings matter. Fundamentals matter. As we transition into an earnings-driven fundamental market, this is really good. That we got to get past this stuff and move on. And I think the message that you've been giving viewers and investors has been amazing. And oh, by the way, the companies that have thrown off earnings during this malaise have actually been rewarded, and the ones that have issues have not. And so I think we're getting back into fundamental investing, and that's very good.
All right. Thank you. You're nice to say all that. But
I don't think we're getting back to fundamental investing until the war officially comes to an end. By the way, Chris is on the way. He just needed to update his WhatsApp. So, the idea that the market is being traded off fundamentals until the overhang of the war goes away, UNH still making a move after hours, 9.4%. I think it's hard to talk about PE ratios and earnings multiples if oil continues to spike. And as per Trump and his announcements today, he is very succinct on the idea that oil will come back down and it'll be okay. But until that happens, who knows if it's like meaningful enough at this point to believe. 281 to 309 on UNH after hours, as that one is continuing to make a massive, massive, massive move. Chris Patel,
Give me 1 second, brother.
who is fixing his mic. And then we will hear from what he has to say. A lot of you guys thought he was sleeping. He is not sleeping. He did fall asleep last week, though. And 3 weeks before that. But we got to give him some we got to cut him some slack because he does work overnight.
I'm just trying to connect my headphones. Okay, let me just talk it out. I can hear you over the speaker. So, a couple of things. UNH and all the healthcare insurance.
Are you on the right mic?
Are they? Am I on the right mic? Let me see.
Your mic sounds off.
Let's see. Camera,
Maybe
camera, standard, audio, Zoom. Hello. Microphone. Hey, can you hear me? Hello. Is that okay? No. Hold on. Let me reconnect.
Okay, yeah, do that. Dude, Chris has been streaming with me for 5 years. Goodness gracious. Medicare rate increased better than expected. Yes, 2.48%. That's why the market's getting a lot more excited for this. People, a lot of people bought the dip on UNH since it fell from 600 to 400. So people have been in this trade for a long time. It's obviously been stuck for a bit. But, it's also, UNH is a real company. It's not, it's not a meme stock or anything like that. It's just obviously got re-rated pretty aggressively. But just like a lot of the tech names, they don't have the same tech growth, but multiples have been depressed. 16 times forward for UNH is not the cheapest in the world, but it's also not, 40 times like it was about a year ago. Okay.
That should do it, right? Can you hear me?
No, it's horrible. There's so much background noise, dude. It's like a little hissing sound. I think you're using your headphone mic.
Okay. My Zoom. Hello. No, it's definitely my mic. I don't know what's going on with it. Give me 1 second.
Okay. Chris has a pro mic already. So he's using an air purifier.
Hello.
That's worse.
It's worse? Okay.
Oh my God. You might just have to call in from your phone, bro, at this point.
Yeah, I'll just call it from my phone. Yeah, I'll call it from my phone.
Okay. Goodness, that's bad. Yeah, I'll give Chris a call here. All right. Let's give him a call here. Is he in Iran? That's oh my gosh, dude. Well, I think we'll find out how bad the overall energy infrastructures in Iran tomorrow if Trump goes through with this. Again, it's 50-50 on this poll. 50% of you say he's actually going to fight and strike. 50% say no. Which just shows how confused this entire market. I mean, that's similar to why the put call ratios are basically at 1. People are buying puts and calls at the exact same time because they're just not fully sure. UNH 307, still after hours. Okay, I think you're good now.
Yeah, dude, I don't know what's going on with my stream. I haven't streamed in like a week, and I don't know why my mic and everything is just not working today. I have to go. Oh, whatever. I'll figure it out. All right, so UNH is doing good today. Finally, after a little bit of pain.
Okay, so we'll talk about a bunch of topics, but yeah, let's do like a good 5-7 minutes on UNH. Why is it up 9%?
So United Healthcare has a really big Medicare Advantage business, and one of the reasons why it took a giant hit in January was because one of the proposed rate changes. So Medicare Advantage is a government program where the government basically pays insurers to take care of people who are older, right? And so if you have two types of Medicare, you have traditional Medicare and you've got Medicare Advantage. Medicare Advantage allows insurers to kind of like tailor some like certain plans to the person's needs. They also provide like supplemental benefits here and there. But you know, the whole point of this was that you want to have insurance plans compete against each other to get the patient the best care for the least amount of cost to the government. Now, the reason why UNH took a hit in January is because the government is the one that's paying, they actually determine how much to pay you based on the patient's diagnosis and everything else. So if you're like 78 and you've got diabetes and you've got heart condition, of course you should get paid more than someone who's like 65 and just retired and all the other stuff. Now, one of the things about Medicare Advantage is that it works in this way where the government, because they're paying, they get to dictate how much they're going to pay you. They can also dictate how much they can pay you based on that diagnosis. January, they basically said, listen, inflation is up, but we don't care. We're going to basically propose a 0.09% increase from last year. Now, of course, everywhere medical costs are rising at a pretty extensive pace. Now, if you're telling someone who's working in Medicare Advantage, like, hey, listen, the insurance company, we're not going to pay you as much, or we're going to pay you pretty much just a very small amount compared to last year, that's going to end up impacting the company's margins next year. So 2027, it would impact their margins. So a lot of times what a lot of these insurance plans would do is basically cut benefits and also stay away from areas that has the most sickest populations and all that stuff. So basically what they do is something called narrowing their provider and patient pools. So they basically remove the sickest people, and the sickest people end up probably on another Medicare Advantage plan, or they end up with traditional Medicare where, the government just has to accept them. So a lot of what these Medicare Advantage insurance companies did was pretty much lobby very hard to the government and said, look, you can't have a situation where you're going to only allow a very small amount relative to the cost of inflation and everything else. So they were able to get a rate that increased by about 2.5% instead of nearly zero. Let's just say zero.
The market expected zero?
Yeah, well, that's what the announcement was in January, right?
Oh, right.
So
That's why UNH
2.5
fell from 350.
Right, and not only UNH, but all of the the insurance companies that have a disproportionate amount of Medicare Advantage patients. UNH is the largest among them. Now, one of the other headwinds that UNH ended up facing was something called unlinked encounters, where basically, you could go as the insurance company, look through the patient's chart and say, well, this person has this, and this. Based on this diagnosis, you should be paid more, right? Because they have this, specific ailment. Now, the challenge is CMS kind of changed it and saying, look, you can't just go back into the chart and say that this person had something like this without a doctor actually verifying if they had it or not. Like if you came in, your arm had a fracture and you also had a headache at the same time, you can't say, oh, this patient has persistent migraines and code you like you have a migraine diagnosis and you have an issue with arthritis on your hand, right? Or a broken bone. So that's one of the major changes that CMS had, where they basically said, look, any diagnosis that were not linked to an encounter, they would no longer be counted toward risk scores going forward. So on a per patient basis, they wouldn't necessarily get as much money, right? Because Medicare Advantage, they collect the money up front and they end up taking care of you, or they get, you get taken care of. And they basically, work out how much they're going to pay the payers and all that stuff, right? And so if you have a large amount of members, you can kind of dictate to the hospitals how much you're going to reimburse them. And because you have like this giant scale, United Healthcare and Optum are some of the well, it is the largest health insurer in the country. They can basically push a lot of hospital systems around and they can get the best rates. And so their MCR is usually the best among all the healthcare insurers.
So
So
if
from
someone
an,
didn't
yeah.
own UNH based on this new update, which makes sense, everything you're saying, is this the catalyst that you think people have been waiting for to finally buy UNH or any of the healthcare names?
I think this could be something that lets UNH get back to a certain level that it was prior to this this basically dragging it down, right? So the possibility of this getting back to like the 350s is rather high now, considering that this was going to be a massive headwind, and now it's sort of like a tailwind because the market was expecting the absolute worst case scenario. This doesn't mean that UNH is completely out of the woods. They've got other challenges that they have to kind of contend with. And this is not something that's, UNH is not a story that's going to be fixed overnight. Like this industry still has unanimous bilateral, I don't know what's the opposite of support, but basically both parties, if there's one thing they're united against, it's the health insurance companies.
Yeah.
Okay. And the public hates health insurance companies too. Like Luigi Mangione really messed these companies up and their business models up hard because he really brought a lot of things, like basically brought a lot of attention to the industry. And it was at a time where the medical cost ratios were rising faster than what these guys could adapt. So it's like any other business, Amit. When you are in a business and you're given an ample amount of time to change your business based on new circumstances, you can do it and you can maintain your profit margins, all the other stuff. The challenge tends to be when you have like sudden changes, right? So right now, no one in January was expecting a proposed rate of 0%. Like nobody. Like everyone thought it would probably be 1%, 2%, and then they would kind of like raise it up to like 3 or 4. No one thought it was going to be 0. And when it hit, the markets just lost it. And everyone's like, wait a second, if they're not getting paid more, but their costs are going to be higher next year, that means that's going to eat into their profit margin, which means that it's going to eat into their earnings, right? So now that that's kind of like been taken back a little bit, it's not to say that UNH is completely out of the woods, by the way. All right. So anyone here who's buying UNH at this price, just know that you're buying a company that's in turnaround mode. You're not buying a company that's like, oh my God, everything is great all of a sudden, right? So just keep things in perspective.
Right.
And it's not just them. It's all of the Medicare Advantage and health insurance companies. Like all of them are dealing with the same exact issues. So it's not unique to to United Healthcare. United Healthcare just has a lot more exposure to Medicare Advantage than some of the other players are. So you have to kind of be very granular in how you approach the industry. But for me, when I look at UNH, I see UNH is not just a health insurance company, but it's also a provider of like other services like pharmacy. So it's also a PBM. It's also quote unquote like a bank because they have the largest HSA plan in the country. And so, and they also have like a vertically integrated business model that allows them to actually like maintain certain levels of profitability that other businesses they're not necessarily as good at doing. And with their new CEO who's come online, well, technically he's like the old CEO where he kind of built the company up from like, I don't want to say from the ground, but he kind of built the company up. Stephen Helmsley, they got him back. And the one thing about him is he's like a stickler. He's an accountant, right? So by trade, he's not a medical professional. He's a goddamn accountant. Like he's going to go through the numbers. He's going to cut waste where he can. One of the major things that he's doing right now is integrating AI into United Healthcare to try to do more claims processing with the least amount of effort to try to lower the amount of cost that like the insurance company has to deal with in order to get services to patients and stuff. So all of those things are kind of working in the health insurance, or especially United Healthcare's what is it called, Advantage. They also have a great business called what is it called, Optum Insights, which is like their technology platform where they sell software and software services and data aggregation, all those services. That's high margin. So unlike the other insurers, which kind of rely on, purely providing health insurance, and then, they also have some of their own PBMs and stuff, United is a little bit more diversified. So in terms of like where institutional people would like to put their money, typically they would put it in something like UNH rather than one of the smaller players who may or may not have the same level. So in terms of like, how do you say it, like a blue chip in health insurance, United is the blue chip company, right? So that's the one that's like the big daddy of it. Now, I will say one thing, and this is just, because your viewers are on here. I personally will get to a certain level and I am going to exit this position. And it's not because I don't believe in the industry, and I think that there's, value in holding it long term, but over the last probably 6 to 9 months, I'm morally conflicted on holding this industry. Like it's
Okay.
hard for me. It's hard for me as a person who's
What
worked in
is the
healthcare to do it.
last question on this, then we'll move on. What level is that? 350, 400? Is that kind of what you're looking at?
My price target for end of year 2027 is about 400, right? So,
Okay.
but I'm being very conservative. Like I'm not trying to like go overly crazy with it, but in my opinion, 400 should be a pretty good baseline. It could be 450. I'm not gonna, say that it can't get higher than that, but in terms of just how much headwinds they really have, and you also have to remember this is an administration right now that's not exactly in favor of, healthcare for all. It's kind of more like, hey, listen, healthcare is great, but we kind of have this military thing we got to deal with. So, just letting you know, like we don't exactly have an administration in office that's super bullish for healthcare insurers. I mean, when Democrats take control and you have a Democrat president and like a Democrat Congress, you're more likely to see this industry probably succeed than probably the Republicans. Republicans are usually very like, hey, listen, healthcare should be like a, not as big of a priority as like the Democrats do.
Okay, so I think that's fair, and that's a good explanation for why UNH made a pump. There's two other main topics to talk about today, which is private credit and the war. Let's start off with the war first, and then we'll get into private credit. What are your thoughts on what's going on? And I know that's an open-ended question, but obviously a lot of stuff has happened over the past couple of weeks, literally over the past couple of days, over the past couple of hours. I'm sure you're up to date on pretty much everything that Trump is saying, what the Wall Street Journal is reporting, and there's all this tic-tac back and forth. From an economic perspective, and obviously, guys, I don't get as political, but Chris does have political opinions. How are you interpreting everything that's happened over the past couple of weeks?
I mean, the challenge here, trying to keep, the political part of the equation separate from like the actual implementation of how everything's happening is sort of weird, in the sense that I personally did not think that this war should have started. But now that we're in it, I think that the US has the obligation of finishing it in a way that doesn't see the other countries in the area deal with this long term. Like, we stepped in it. Now we can't just leave our friends behind anymore. And the countries that I'm talking about, majority is Israel, of course. Then you've got all the GCC countries and stuff like that. So I think I think at this point, yes, there's a lot of, like conversations around trying to exit this, but you don't want to exit this in a position where you're leaving the Iranians in a stronger position than you found them. Because if you do that, what you're going to do is, one, people are just not going to trust the United States anymore. And that's really bad for us because, we want to stay the petrodollar, keep the petrodollar as strong as possible, because that's, one of the things that benefits us as an economy, but then also as a global hegemon. and on the other side, you don't want to be in a position where you're going to cause long-term issues for the region, basically. So I'm at a point right now where I didn't agree that when we went in, I thought that that was a foolish mistake. I think the Iranians were choking with sanctions already. They would have probably had regime collapse in the next couple of years by themselves. I think the U.S. could have done more in terms of trying to support the people of Iran. Try to get independence by putting external pressures on, and maybe even supporting some groups on the inside, and actually try to like take a step back, build a coalition of other countries before you go into the meat grinder. But I think they probably saw that there was an opportunity after the riots, and they said let's go in. Like I said, at this point, I'm America first. Team America is always where my loyalty is going to be. So we'll see what happens. Now, this is a game of so originally this was a game of chess. I think it's kind of like changed from a game of chess now to a game of poker, right? So each side now is in like negotiation mode to see what they can get out of this from a maximalist benefit for each side. So the Iranians, they're focused, they're laser focused on, listen, we got you by the balls because of the Strait of Hormuz, so we are going to demand everything that we can possibly get. We want sanctions relief, we want to get paid reparations, we want to get tolls from this thing. We want an apology. We want Trump to come and kiss the Ayatollah on the forehead and say, I'm sorry, whatever, all those things, like everything there they want. Now Trump is saying, F you, we want you to take completely denuclearize. We want you to just basically become a calm country in the Middle East. No more supporting proxies, no more doing this, no more going after Israel and all that stuff. So a lot of the asks that the U.S. has and Iran has, they're really far apart from completely coming to a deal. But as far as I can tell, I think that we're in the slow path, glide path to de-escalation. And you can
So
kind of
you are more bullish than not on this thing ending sooner than later.
I think so. I think so. And the reason why I think that that's the case is because you can kind of see that both sides are doing their best to kind of, I don't want to say save face, but that's probably the right word for it, where the US doesn't want to admit that they shouldn't have gone in, and the Iranians don't want to admit that they've basically been, hard like building up this giant arsenal of drones, ballistic missiles, and all this other stuff. I mean, look, if you were a non-aggressor, you wouldn't be building up this level of defense. Okay. And I think the Iranians, they definitely stepped in it by attacking the GCC countries. Like I could understand some of the Gulf Coast countries that they attacked because we really have a lot of close ties. But then there were other countries within the Gulf Coast that were like pretty much like very neutral, and they were very beneficial to the Iranians because at every time the Iranians would have some level of sanctions or they would have issues, they would kind of step in the middle and say, look, we're working with the US, but we also don't want to see Iran fail. So now a lot of the same GCC countries, they kind of turned around and said, what the F? Are you going to attack me with ballistic missiles? Like, you're going to send drones at me? So now they're in a position where they're like, we can't let these guys stay in control long term. Like, they're insane. Like, anytime there's a problem with the Americans, these guys are just going to use us as a cudgel. So, this is a situation now where everyone is kind of going to have to, take a little bit of bitter pill and calm down. I think from what I'm seeing, the US's main leverage point is, we know where you live. We know where you hide. We can take you out at any time. The Israelis are just chomping at the bit. Like, in terms of good cop, bad cop, I would never have thought that there was another country that was ready to be bad cop. But Israel's like, nah, we're bad cop all day. We are willing to be bad cop until the end of time. So
Do you think Trump? Okay, so what do you think about this 48-hour deadline? Do you think he's seriously going to bomb their energy tomorrow?
I think there could be a possibility where he takes out outlying facilities that could be theoretically repaired, and they're not necessarily like damaging to the point where they can't be rebuilt. Like the other day, I saw that they attacked like the Iranian nuclear facility, but what they did is they hit like a security guard post, right? And I think that was just like a base. I mean, come on, these guys have been hitting hitting people like in their homes, in their apartments. You're telling me like bomb miraculously missed the facility if they really wanted to target it. So I think what it is that was just like a soft reminder to the Iranians, like, listen, we know where everything is. We can attack you. Don't get us to the point where we're starting to hit infrastructure. And I think a lot of this is just bluffing between the two who are trying to basically get the most out of this deal possible. The Iranians, they're launching drones all the time and missiles all the time and hitting boats once in a while too. So this is, like I said, this is more of a game of poker and the cards are kind of on both sides. Now, the thing is, as an investor, our job is to figure out like who's got the best cards and who's going to come out on ahead, but more important than that, what's the timeline? Like,
Yeah.
is this going to be something that drags out for an entire year? Because if it does, we've got a serious problem because then we're definitely going to hit a recession because inflation is going to creep up significantly. The markets are going to reprice that higher inflation. People are not going to be okay with 3, 4, 5% interest. They're going to be demanding a much higher premium, like 7, 8, 9, 10% premium on a lot of debt instruments. And a lot of business models, they're not built to handle a 10% yield on a corporate bond. So you would end up seeing that we end up going into a recession. And I think the Iranians, they realize that because the president has been such a force in terms of tying his personal brand to the economics of the country. They're kind of saying, look, if we want to hurt Trump, the best way to hurt him is to hurt the economy, right? And the best way to hurt and the leverage point that they have, of course, is the Strait and the prices of oil that could kind of cause all of that. So like I said, each one of these things is kind of working in a way. Like I do see that one thing is everyone should probably separate the IRGC from the Iranian people because they're kind of like a two different things. And I think sometimes when we say Iran, we kind of think of this, giant, like country, but it's actually what we're at enemies with is the IRGC kind of ideology, right? Of trying to spread certain ways of thinking that that may or may not exactly work with the West, right?
So how do you think it concludes? Because the Iranians want Trump to leave and reparations and all this stuff, and the U.S. doesn't want to leave because then they're going to be seen as losing. They kind of want the strait to open while they're still there. Like, what do you think the sort of Liberation Day 2.0 deal will look like if we do get something that both sides can somehow effectively agree to move on from this?
Well, number one, the U.S. is definitely not leaving. Like the GCC countries and stuff, we have a great relationship with them. It's a counter to China. It's also the U.S. petrodollar. So that ask is completely maximalist. Like, there's no way that the U.S. is like, yeah, we're just gonna up and leave. Like, forget that whole thing. Like, that's an ask that's just way too broad. Now, on the other hand, you can't just expect the Iranians to open the strait without some sort of concession. So, in my opinion, I think from what the U.S. could get out of this, number one, they would probably offer, and I think it's a very strong offer, that they would take away sanctions. Like, sanctions have really hit the Iranian economy hard prior to this. So, number one is sanctions relief, right? Number two is the Iranians have frozen assets all over the world because we basically control the banking system, so we can kind of freeze their assets, and a lot of the EU kind of supports us and stuff like that. So the IRGC has a good amount of assets overseas and everywhere that those assets could theoretically be used as quote unquote reconstruction funds for Iran to kind of build back its infrastructure. Whatever they may use it to buy, weapons and all this other stuff. Like I said, it's not something that I'm too privy to. And the Iranians could say, we'll open the strait and denuclearize, but we won't denuclearize as in we won't get rid of all of our enriched uranium completely, but we are willing to basically go down in the what is it called enrichment, so that this way the you need a highly enriched uranium to build a nuclear bomb, but low concentrations you could use it for like nuclear purposes and everything else. Like my honest opinion is the Iranians will never give up trying to get the bomb. Okay, like they want that nuclear shield. Like, there's a reason why we don't attack North Korea right now. The reason why is because they got the bomb. Like, so they're hoping that Trump right now will make that settlement, but we'll still secretly enrich uranium on the side, and I think that's going to be a much harder thing to monitor and stuff. So as of right now, I think the best course of action would be for us to somehow get into a position where we open the straight again, but then also we're working to, basically get rid of the regime, but do it in a way that's like more softer rather than just a military action, right?
What
But
you're
the thing is,
describing feels like it's going to take a lot longer than a couple weeks.
I think this is
I
one
mean,
of those
it
times.
essentially sounds like it's going to take a few months for this type of a deal to like actually.
Yeah,
materialize.
that's very true. But the markets are resilient enough to kind of handle the back and forth a little, because the uncertainty also creeps in. Because I think if you listen to what Larry Fink said today, I don't know if you saw the clip by him where he
Yeah, I
basically
saw
said
it.
there's one of two outcomes that are probably going to come around. Either we're going to get $40 oil, or we're going to get $150 oil, right? Because if you think about it, Venezuelan crude is starting to come up, right? Then you've got, if you unleash the sanctions on Iran, you've got Iranian barrels starting to hit the market. You got a supply glut of about 2.5 million already in the pipeline. I mean, that's no longer there, of course, because of this whole Strait of Hormuz thing. But prior to going into this year, the IEA had forecasted that oil was probably going to be around $55 a barrel. Like, I posted it on my X if you want to show everyone. So those were the projections prior to going into this war. So the possibilities are that we could be headed into a lower energy environment if everything kind of works out, but it's not going to be instantaneously. So if you look at this chart, it just shows you this was done in February, which is kind of shocking because 2 weeks later, this entire model got thrown out the door. But we were producing more, like as a the industry was producing more than we were consuming. And if you look at some of the consumption trends that are happening in Southeast Asia and in China, you're seeing that with the electrification happening, and even in Europe, there's a lot more EVs that are being sold. So the amount of demand is slowly, bending the curve a little bit. It's not going down. It's just not accelerating as fast as it was in the past. So if you were able to add Iranian barrels and Venezuelan barrels to the mix, and then if the Russia war Ukraine situation resolves, then you got Russian barrels coming online. So you got a lot more oil in the markets than ever before. But that's like Goldilocks scenario, right? Like it's I
Where
find
do
it
you
a
think
hard
oil
to
ends at the end
estimate.
of the year? You have to
Say that
guess.
again.
Put in the chat as well. What number do you think oil ends at?
I don't think it ends at like 60, but I think if I had to guess, even if like this thing gets resolved, there's going to be like a slow ramp up. I think at a minimum, probably 75 to 85 is where I'd guess. The reason why is because you're going to have a lot of countries probably refilling their SPRs, and that could kind of create this artificial demand situation, because you don't want to be in a position where you just, because a lot of the countries are using, they're supplementing some of their supplies with their strategic reserves, right? Like Japan's using some strategic reserves, we're using some strategic reserves, and this is just to make sure that we're not getting like $200 crude prices right now. So if we do get this resolved, I do think that a lot of these countries are going to be like, hey, listen, we better tap up just in case something else happens in the future, or if the ceasefire doesn't hold, or whatever, right? So I think it's safe to say 75, 85 is where we're looking at, oil at the end, if there's some kind of resolution. Don't hold me to that, because of course the energy markets are wild, right? Like anything could happen. So but that's where I
So
would estimate things to be.
SPY traded 36 million shares today, lowest volume since February 2025. Is that, but we were green, even with oil up still 10% from last week. Is that indicative of no one wants to trade this market and people are just scared?
I think there's just so much. I mean, you have to ask yourself. I watch your streams religiously, right? Well, you know what? I do when I'm awake. I mean, but I do catch up sometimes, and I like what you said, and I think that's what the market is doing, because they're following your lead. You said, why would I want to buy when there's so much uncertainty? Why wouldn't I just wait until the uncertainty period is over and then I can buy, right?
Yeah.
Like, why take the risk? So
Even
the
if I have
market
to
is
buy a little bit higher, that's okay, right?
right, right, and that's the thing. Like multi-year, highs are still out there for a lot of companies, right? So it's not like we've hit this like huge, 10, 20, 30% correction in the market where it's just like, hey, everyone needs to just go out there and buy the dip because things are oversold. I mean, yeah, there's certain companies that definitely are oversold, but overall the market's only like what 5-6% off from all-time high. So it's not like you're getting like, oh my God, the greatest discount on the world. That means that you can kind of tolerate whatever the risk is. So I think there's just uncertainty in the market, and people are following what you're doing. I think you're a pretty good investor at this point. As even if you're just a retail investor, you've actually developed a lot of great habits, which I love seeing. Like I like that you're doing covered calls. You're like, listen, there's a lot of volatility, sell some covered calls. So I watched your interview with what's his name, the people
Nick guy from
from
Tasty Trade. Yeah.
Tasty Trades. I said
Yeah.
that's perfect. That was a perfect response. So I think people are getting better at that. And I think a lot of retail investors are sort of in that same mindset right now where they're like, look, there's just so much uncertainty. They don't want to deal with the volatility. They just want to kind of hang back a little bit. And they're doing what you're doing, basically.
What are you doing? How are you wanting to buy the dip? Are you holding? Are you running covered calls? Like how are you navigating this?
I am in a position where I'm doing a lot of research in certain industries that I think are a little bit oversold, primarily because they have other things happening on top of all of this volatility from oil markets. And I think that, long term, I kind of want to have a more balanced portfolio where there's like a little bit more fixed income and not just a lot of tech exposure, right? Like but at the same time, I have a lot of tech exposure. I have Nvidia, I've got Meta, I've got Google, I've got Microsoft, I've got Amazon, like you name it in terms of Mag 7, I got them, right? Now the thing is, I've been thinking this for a while, and it's just like, do I really want to like have so much of the portfolio sitting in that kind of concentration, just in case I don't know, something happens at the company level that may or may not cause valuations to drop. So if you look at like Microsoft dropping like 30%, like who would have thought Microsoft be down 30% from all-time highs, considering that their Azure business is growing like crazy and everything else. So the thing is, there are definitely opportunities in this market to start kind of like dipping your toes in it. But in terms of like just me doing like academic exercises and trying to understand where I want to position myself for some opportunities for like mean reversion, which is you know me, you've known me for like 5 years, so my favorite plays are typically mean reversion plays. Where people don't see value and I see it and I'm like, yeah, I could buy this super cheap and just let it get back to where it's supposed to be. And I'm able to kind of model my safety that way. So I'm looking at a lot of private equity companies right now, which are, everyone is reeling from private equity and specifically private credit. And you're getting a lot of great deals, especially considering the assets that some of these guys have.
Well, let's get into that conversation because I think that's really interesting. So
Yeah.
KKR, Apollo, Blue Owl, JP Morgan said private credit looks ugly today, but he doesn't think it's 2008 level. Are you seeing any value here in your initial level of due diligence that's potentially something attractive?
Yeah, absolutely. I think the key to there's two things. I this is where I wish I had my computer because I actually show people, but there's a big difference between public markets and private markets. And the thing is, because private markets don't have any transparency, people are kind of like wondering all the time, like, hey, wait a second, are the numbers that these guys telling me, are they accurate? Right. So if you look at private equity, the way that private equity tends to make money is that sovereign wealth funds, pension funds, individual wealthy families, they give them money. These guys take that money and invest in different things, and they're able to generate a return, and they give some of that return to their to their investors, and they're able to take some of that money for themselves and then utilize that to do dividends and buybacks and all that good stuff, right? That's the business model that they have. Now, one of the challenges, well, not necessarily challenges, but one of the things that happened after '08 is that there were a lot of businesses that were private businesses. Think of like your like dental group, right? Like there's certain dental groups in New York City. There's like 25 practices all in one company. This company is not big enough to go public, but it's not small enough to the point where they don't need access to capital and liquidity, right? If they want to buy, like, let's say another like practice that has 20 clinics and double up their business, they have to kind of take on the debt to do it. So where do they go? Back in the day, they used to be able to go to the banks and say, hey, listen, I've got this cash flow and, lend me some money and I'll go buy this other dental company and I'll be able to kind of double up my revenue and I'll be able to grow the business, right? So after '08, a lot of the banks, they kind of withdrew from that market and private equity stepped up and they said, listen, we have all these wealthy people, they need to invest, right? And they need a good steady cash flow between 10 and 12 and sometimes even higher if they're really good. So let's work this out. And so private equity grew significantly. So if you just go to, let's say Apollo, go to Apollo, like APO stock, and you go to 2010 to the 2000 now, like just, look at the last 16 years. Look at that monstrous growth that they've had, right?
18 to 106. Yeah.
Yeah. Now look at, let's say, KKR, right? Not, KKR, let's see who's actually, Ares probably did really well too. So ARE,
KKR is up almost 900, almost a 10 bagger in the past
right?
14 years.
And not only did they get this massive capital return with just owning the shares, but the dividends, these guys threw off shit ton of money in dividends the entire time. So if you just go to like Ares and type in like dividend over the last 15 years, like, if you look at the dividend history, you not only got paid a crazy amount of money, by just holding the shares, but you also got a crazy amount getting the dividends from this. So, like I said, the business model worked great, especially because we were in a low interest rate environment, right? So if you think about it, if you want to borrow money and the Fed is like at zero, like literally 0% rates that you can borrow at, what you can do is lever up. So let's say you have $1 million that some rich guy gave you, right? And you want to lend it out and you're collecting like, let's say 7, 8, 9% interest. What you can do is say, okay, let me take my $1 million, right? Lend it to this guy, take that promise, that note that this guy gave me saying, I owe you money and I'm going to pay you 7% a year. They can go to the bank and say, hey, let me borrow money short, right? And basically borrow it for 2%. And they can borrow it for 2%. They can make a 5% spread and they can take that other $1 million, probably not a million, probably like closer to like 800,000 because you need a little bit of equity to borrow from the banks. They can lend that $800,000 to another person at 7, 8, 9%. So you can see that that's a very profitable business model. You're making a crap ton of money on the spread.
But it was when rates were actually at 2%, right?
Right. And that is the key there, Amit. You kind of nailed it on the head. When interest rates are low, you can make a lot of money on that spread. The problem is if interest rates start going up, right? What happens? Now the cost to borrow for you goes up, which means it eats into your profit margin. But worse is that now when you're basically trying to refinance that company that you lent the money to, before you lent the money to them at 7, now you're going to say, well, I need to protect my margin, so I'm going to charge you 10%. That guy may not be able to afford 10%. They're going to say, sorry, bro, I can only afford 7, right? So if you're borrowing at 5 and you're lending at 7, not a lot of money left over in between. So
if rates aren't coming down anytime soon, what is the value you think exists in private equity or private credit?
So the key here is 2 things. Number one, the market is mispricing just how much of a discount to actually get discount to the assets that are underlying the business. That's number one. So basically, people are looking at certain BDCs, right? So if you look at Blue Owl's public BDC, OBDC, look that up.
That one is down 12% this year.
Right now, do a like a 2-year chart or whatever. Okay, so you can see that massive move down that they had from 15 down to 11. The thing is, if you look at their NAV, which is their net asset value, it's closer to like 15 right now. So if you think about it, you're getting almost like a 30-40% discount to what their stated NAV is.
But
right?
isn't that based on the assumption that those companies they invested in, particularly software ones, actually maintain their mark-to-market value? Or
Exactly. That's the other part of all of this. So one of the things that happened recently is people looked at Claude code and said, "Oh my God, software is dead. There's no way that I'm going to pay like a 20 multiple on this company." So what a lot of these software companies, they're getting their loans, they're paying their bills on time, they're doing what they have to. They generate good amount of free cash flow, but people are saying, "Wait a second, what if these software companies get disrupted and they can't pay?" That means that Blue Owl is going to be holding on to a bag of shit where they're going to have debt from a software company that can't pay its obligations. And investors are saying, holy shit, like on the private side, public side is a little bit different because, it's more just people can just sell their shares. On the private side, you have redemption. So a lot of those rich people, they saw this saying, oh my God, software is dead. 25% of the portfolio is software. I better pull my money. And so everyone is trying to rush out the door all at the same exact time. Now, what that does essentially is create a situation where if you have, if you're in the public markets, you can just shell the shares, you get the cash, you pay your investors. It's easy. But in the private markets, it's not as easy because you have to find a willing buyer who's not trying to, gut you. There's hedge funds out there right now that are going to a lot of these private equity companies and saying, listen, I know you need that liquidity. I'll take that investment off of your hands, whether that be credit or equity. I'll take it off your hands at 60 cents on the dollar.
Okay. So the reason you're interested in private credit is because you don't think the software sell-off is justified, and you think the mark-to-market value on a lot of these companies that the Blue Owls of the world are holding are undervalued essentially at this point.
Pretty much. I think what the market's done is oversold things. I definitely think that there had to be a re-rating in private equity and private credit, especially a lot of this direct lending stuff that may or may not have been like the best. But it's, in my opinion, it's not nearly as bad as what the market is saying right now. Now,
But here's the
usually,
question then, why? But the pushback here is, why not just buy the public software names that are also down 30, 40? Why buy the Apollos and the
I've been doing that. So that's what I'm saying. You want to diversify a little bit too. So right now, if I put money, all of it, like let's say my wad into Adobe, it's like, oh my God, I'm kind of locked into the Adobes, the CRMs, the ServiceNows. But a lot of these BDCs, they only have, let's say 25% exposure, but they're down 50%. So that makes me think like, wait a second. Even if, let's say, every software company in their portfolio went to zero, that still means that there's 75% left on that value of that business. Now, of course, I know 25% is not where, not every company and software company is going to go out of business. It's probably going to be, 5, 10, 15%. Now, if you do the research, credit is where you want to be, because at the end of the day, what happens is after a certain period of time, those same software companies, they just give you your money back. They go find another buyer somewhere else, right? Or they go find another creditor somewhere else. So the other thing is, private equity has this way of kind of helping each other a little bit because they don't want to see each other fail. So there is tremendous amount of liquidity that's out there that's just waiting to buy a lot of their stuff up. It's just they don't want to do it at like crazy low value. And this is the same thing that kind of happened, if you remember, with the regional banking crisis, where a lot of the regional banks, they all took a hit at the same time. And the reason why they all took a hit at the same time is because people were scared that this was a liquidity problem, where interest rates didn't match the redemption. So, the banks, they go out there and they lend money, right? The problem is, if all your creditors come to you at the same time and they want their money out, you've got yourself a bank run. Private equity, unlike the banks, has usually like redemption limits that they place, that you can't withdraw more than 5% of your initial investment at a time. So it kind of like slows the process, the exit process, and it allows these private equity and private credit companies to kind of like sell things, but do it at a very slow pace where they're not basically selling things on fire sale. And if you want to just do a quick exercise yourself on, the history of something like this where it worked out well, is go back and look at something called BCRED. BCRED is the largest, that's why I think it's from Blackstone. It's one of the largest private BDCs that's out there. And basically, they were able to navigate a very similar situation in 2022, and everyone kind of came out ahead. So my expectation is, if you're willing to find the right sponsors who've got, really good good practices in terms of lending, where they make sure that they're lending to the right types of software companies. They're lending to companies that are at above average in terms of making sure that their software is actually worth something. They'll do well. Like for me, my bet is on this company called TPG, right? TPG has exposure to software, but if you look at their investor letter, they clearly state majority of their software names that they have are more newer vintages that have more of a boost when AI is probably going to help them accelerate rather than it's going to pull them down. Companies that are like system of record, companies like ServiceNow, companies like CrowdStrike, which are cybersecurity names, but not necessarily those companies. It's just the smaller versions of those companies.
Real quick, Broadcom, Google, and Anthropic expand collaboration with long-term TPU and networking supply deal through 2031. Access to 3.5 gigawatts of Google TPU AI capacity, those custom ASICs. The stock is up 4% after hours, as we can see Anthropic getting some more momentum.
You can't get you can't go wrong with Google, man. They own their models.
That's what I was going to ask. So I think your private credit thesis makes sense, and obviously a lot more due diligence needs to be done to see if those things can have that mean reversion. But in terms of tech, Google, Amazon, Microsoft, what's the number one thing on your list if you had to buy right now?
I would say my number one pick. It used to be Google, especially when it was $100. Like I was screaming at the top of my lungs. Like it was so bad when people thought that search was dead and blah blah blah. But I was like, look, they got all these side businesses that are doing well. So Google is like, it's kind of, I don't want to say it's played out, but it's going to perform really well. But it's not something that's going to give you like crazy alpha. I think Amazon is probably the most underrated among them, considering just how like deep their business is with AWS, and then all this stuff with their Trainium chips, and they have this giant ownership in Anthropic, and then they've got this delivery business. They got Amazon Leo coming online, where they got.
Are you getting more and more bullish on Anthropic as just like a product?
Bro, I use Claude all the time. I love it, man. Like it's just.
So you
I
want to
love
get
it.
exposed to it.
Yeah, and then exactly. Well, there's two ways you can get exposure. You can buy Amazon, or if you want to backdoor your way into like a value play on Anthropic, you could buy Zoom.
I have heard of this thesis.
You can't see. That's the thing that people don't necessarily like get. Like, so when I said to people like, look at Zoom, people are like, Zoom? What are you, idiot? Like, but if you go to Zoom, Amit, and you go to their investments, like long-term investments, do you have Fiscal AI? Or if you have their balance sheet up, you can see it. If you go to their long-term investments, their Anthropic stake is growing. So if you think Anthropic is going to be, let's say, $1 trillion company, right? Right now, the Zoom stake is worth, I think, like 1 to 2 billion. It could end up being worth, it could end up being worth probably like 6 to 7 billion at a $1 trillion market cap. And if you just look at the balance sheet that Zoom has a really strong balance sheet. They have a good amount of cash. They still generate free cash flow. So you're getting a business that's already operating, but then you get the upside of that equity gain as well. So, like I said, if you just want to,
are you worried though with SpaceX 2 trillion, Anthropic 1 trillion, OpenAI 1 trillion? Like, people are too excited about the private markets when public stocks are discounted as much as they are?
No, because I can sell before the IPO, right? So remember what they say, buy before all of this shit hits. So right now you see everyone jumping on Claude, you're doing all of this, the IPOs are coming out. So people are getting super excited. Bro, I'll sell before the IPOs come out. By that time, everything will kind of be priced in, right? So if you know that Anthropic is going to be coming out at, let's say, $1 trillion, what is that thing called? $1 trillion IPO, you could just sell your Zoom at that time, before it comes out, and let's say it crashes to 500 billion, and now all of a sudden Zoom takes a bit of a hit. Whatever, you sold.
So you sell the proxy before or during the height of the IPO, which means you have to time it correctly, but also you have to assume that the proxy benefits. Like, Anthropic is going to add, I don't know, 100, 150 billion to their balance sheet theoretically on paper. Like, the stock would have to reflect that if Amazon doesn't actually sell, right?
Yeah, absolutely.
And that's where you have to sell the stock at that point if you
Like I said, it just depends on your personal preference too. Because if you really are a believer in, like, let's say SpaceX, you're a believer in Anthropic, dude, even if, like, let's say the market post IPO dumps 25-30%, whatever, you hold it. Just chill.
No.
You know, there are people out there, there's permanent capital that's out there that's going to chase this thing and they're going to buy it. Like, do you see the value in Anthropic disappearing anytime soon?
No, not at all. Not at all.
You know, now I think OpenAI is overvalued because brother, I have not seen nearly as many people talk about OpenAI anymore. Like, everyone's like, yeah, whatever, ChatGPT's kind of played out. I just use Claude. Like,
Yeah, I still use
kind
it
of
every
nuts.
day, but for the building stuff, it's Claude. It's not Codex. At least not for me.
Yeah. Like you can ask the chat. Like, you should probably do a survey. Like, which one is the better model? Is it OpenAI or is it Claude? I guarantee it's probably going to be 2-1 in favor of probably Claude. You know.
Yeah, I'll ask right here. But
And
that is a fair point.
And what's interesting is that OpenAI is worth, I think, like, based on the last round, like 900 billion, something like that.
850. Yeah.
850, and right now Claude is still valued at 380. I think the last round was
No,
380.
600. Well, technically yes, but in the private markets it's like 600, but it's still cheaper than OpenAI. So,
Right, exactly. Yeah. Well, the thing is, remember, Zoom is basing their calculation, I think, right now on that 380 because they haven't done the next year yet. It's like Microsoft. You look at Microsoft's stake. Like, if you look at Microsoft's EPS last quarter, a lot of it was actually equity gain in OpenAI.
You're right.
You know,
right.
so people are looking at Microsoft and saying, "Oh my God, look, they're trading at this really low PE. Oh, buy Microsoft." But I'm like, yeah, well, you know, you better look at look at where that EPS is coming in from.
Do you think we bottomed, Chris, in the market?
I don't know, man. Just with the administration being so erratic, you never know, bro. You know, I want to say yes. I want to say yes, but I don't know.
If you had 100 grand of dry capital right now, would
I
you?
do have 100 grand of dry capital.
Okay, so that's a perfect question. Then, are you deploying any of it, or are you waiting till Tuesday 8 p.m.? Like, how are you thinking of that cash being on the side?
I'm gonna follow your advice. I'm gonna wait until the uncertainty period is over. Like, at this point, let's just be sure before we start deploying any more money into the market. You know what I mean? Like, you just want to have a little bit of money on the side. Not to mention, I gotta do other things with it, so I can't really, like, use all of it. But that's, you know, there could be another opportunity where some kind of credit event comes along, which gives us even a bigger discount. But yeah, a lot of my portfolio is also in some fixed income stuff, so I'm not looking to take too many risks right now. If you look at, like, and I was telling this to Steve a couple of weeks ago on on the thing, I said the thing that worries me all the time is that CAPE ratio, right? The cyclically adjusted PE ratio from Robert Schiller, how it's like trading at pretty much next to all-time highs again. That kind of worries me. I know that some people say, well, that this is just the new normal, and I don't know if I necessarily believe that. I do think that, we have to just weigh our risks and understand where we are in the current market. I do think that at some point we're going to get an AI reckoning where the unit economics may or may not work to the degree that people think. And I think the amount of capex that's going towards AI may end up slowing down dramatically. Not in terms of, like, it's not going to stop growing, but it's not going to be that 60% anymore. It's probably going to be like 20%. And people are going to say, wait a second, what do you mean Nvidia is only going to grow by 20%? What do you mean, like, AMD is not going to be like 100% year over year growth? Like, you know what I mean? Things are just gonna sort of like slow down, in which case then everyone who's like bullish on AI hardware is probably gonna start, you know, trying to run for the exits all at the same time. So that could cause some kind of quote unquote event. I don't know. We'll see what happens.
The one other thing that's really interesting, I think, about what's going on right now is that there are so many headlines around inflation and oil spiking up. CPI is expected at 3.4. Do you think there's any world where we get the cut this year, or should investors be, pretty ready to not get the rate cut because you just can't do it with CPI at almost 3-4%?
I think it kind of depends on the situation with with Iran. Like if you had told me like in January, what do you think, Chris? I said we probably were due for like 2 to 3 cuts. Housing is going down, and the energy prices were lower, and everything was kind of leading towards lower inflation going forward. But this kind of like changed the whole dynamic completely. So as far as I'm concerned, like cuts are completely out of my brain. Unless this thing gets settled and it gets settled rather quickly, I don't think that we're going to get any more cuts. But then again, this is one of those things. Like we're in the casino right now. Like this is not investing. This is the casino because you're basically gambling at this point. What's going to happen? What's not going to happen? And the only thing you could do is just put your probability hat and say, okay, I think the probability of the straight opening by April is X, so I think that inflation should be Y in December, and based on that, I'm gonna invest, or you're gonna do something else. So unfortunately, this is a time where neither fundamentals nor technicals are really gonna help you. You just have to rely on day to day information, and I think that's exactly why people are not jumping into this market to the same degree as we did during Liberation Day. And I think I was talking to people in LA, and I was like, look, I see this. I see the positives happening that lead me to believe that we could be getting to a bottom. And the thing that I've been tracking is basically ships moving. And I don't know if you heard this when I was in LA. I said the number of ships are starting to gradually increase
Yeah.
because
Yeah.
as much as Iran wants to say like, oh, we've closed the Strait of Hormuz, they understand that they have a certain amount of leverage before they start hurting other economies. They want to hurt us, but they're also hurting other countries. Now, the thing is, there's a certain level of pain that they can they can give to us, but if they give that same level of pain to other countries, they're all going to get together and say, wait a second, we better get together and open this goddamn strait because our economies are cratering right now. So if you look at the countries that Iran has given this quote unquote passage to, I think at this point it's like 15 countries, and it's all their major customers. Right? They even allowed Iraqi barrels this weekend to come online. Iraq is like, yo, listen, we could do 3 million barrels next week. you know, there's another 7 million barrels that have been rerouted through Saudi and Yanbu. So that's another, so out of the 20 deficit, you're looking at 10 right there. Fujairah, which is what the UAE is doing, is probably another million to 2 million barrels. And we already had like a 2.5 million barrel surplus going into this. So you're looking more of a deficit instead of it being kind of 20 million barrels in deficit. Is probably closer to like 5, maybe 7, right? Which is still pretty high, but it's not, oh my God, the world is ending situation. So, and not to mention, if you think about it, a lot of countries, they have reserves that they can rely on, at least temporarily. So the Iranians are playing this smart. They don't want to completely cut off the international community because then everyone will kind of turn on them. So right now they're kind of playing their, listen, as long as you're our friend, we will allow you to do what you're doing. So that kind of puts a lot of pressure on the U.S. To without putting pressure on the international community. Because I think if the international community kind of turns around and turns against Iran, then Iran's going to be pretty much a pariah. And they don't want to be a pariah, They want to at least have some legitimacy internationally.
Okay, last 5 minutes, we'll do some rapid fire again. Chris, thank you for joining. I'm putting Chris's Twitter in the chat, so please make sure to follow him. Also, congrats on 40,000. 41,000. I just noticed you hit. So incredible stuff. Rapid fire, NCL. Do you still like the cruise lines here?
Absolutely. NCLH has some unique things going for it. They had a complete board refresh from Elliott Management. Elliott Management took a 10% plus stake in them. They said, listen, there's a lot of SG&A that you guys have been spending money on that adds no value to shareholders. We're going to cut all that shit out. We're going to streamline the business, and we are going to return value to shareholders. Their projection is $56 a share in 2 years. I don't think that they'll get $56, but they can pretty much do really well. So if the war situation resolves, NCLH and CCL and RCL will rally. The one unique thing that NCLH has that CCL does not at this moment is that they do have hedges for the next year. So usually what happens is they buy oil ahead of time. So they're not hedged completely where they've bought 100% of their consumption, but they've got about 60% of their consumption's already been hedged So in terms of like the near term impact from higher oil prices, they're not going to feel it nearly as much as some of their competitors might. So in terms of earnings, next year they streamline their earnings, and even this year if they streamline their earnings and this thing quickly resolves, this thing can get back to about $30. So I'm looking, that's like a 50% move higher. So just letting you know, NCL is a good place to look for value where others may or may not be seeing it.
I think the airlines as well. If oil actually does collapse, those will be the first beneficiaries. Micron, you like it still, or I mean, you
Not
never
a
like.
cyclical. I'm not a big memory guy. Cyclical business. I don't know. Like sometimes, like Google Paper scared the shit out of everyone. RAM prices dropped. Like I said, cyclical business. Not really interested.
So you mentioned these private credit companies getting sold off for no reason. Do you think SoFi is a bargain down 40% this year?
I don't think so. I think SoFi actually has exposure to private equity and private credit, where private equity and private credit were buyers of their loans. So in the future, one of two things is probably going to happen for SoFi. Number one, their originations, they will keep originating stuff, but the private equity and private credit guys are probably going to say, "Listen, I ain't buying no 7% student loan. I can get 7, 8, 9% from a triple B rated company. Why would I borrow with basically this tranche of loans from you guys?" Especially when the consumer is actually weakening. If you look at student loan delinquency rates, they've just hit, I think, like 5-year or 10-year highs or something like that. Just look up student loan delinquency rates.
I think it's at 11.2%. It's pretty bad.
Yeah. So 1 out of 10 borrowers not buying. Not exactly the type of portfolio addition you want to have, especially while they're having liquidity issues, right? If you have all these redemptions coming in, the last thing you're doing is, yeah, let me go buy some loans that are in an industry that's seeing higher
But you
levels
don't think
of
the growth is going to be enough to withstand it, or they're just not going to grow that much, in your opinion?
I think they're just not going to be able to grow as much. But then again, I don't know. Like SoFi is one of those things. Like to me, I see it as a bank. I don't see it as like a fintech platform like some people do. So if the number of originations goes down, I think that their growth rate will slow down. In which case they'll get re-rated down. So it could end up, best case scenario, I think it stays between 10 and 20. Worst case scenario, it retreats below 10. So I'm like, there's a better opportunities in the market than SoFi. You're looking at JP Morgan trading at like a 12 handle. And then you've got these guys at like 20 something. It's like, sorry, bro. I think I'll stick to the traditional banks.
VG, still like it here?
Love VG. Always gonna love VG. This is a 10-year hold. I don't really care that it went to 15. I'm waiting until it gets to 150. Me and Matt, we're gonna make our careers on Venture Global and next decade. So, yeah. Long term, this company is gonna do really, really well. Just like I said, you better be ready for volatility. They don't call natural gas the widow maker for nothing. So
last couple for you. Rocket Lab, any interest in playing SpaceX with a proxy or no?
not really. Not really. It's just not my forte. It's a completely new industry. So for me, it's like, how do I value it? You know? So a lot of the people that are buying it because, they think that this industry could be a growth vertical. And I do think that there's possibility of that, but I'm just not as interested in it. I will say this. If SpaceX comes out at IPOs and it has this massive drop post IPO because people are just like, oh my god, it shouldn't be this much, and it gets oversold, I'll probably be a buyer.
Yeah, just in terms of pure potential, obviously there's a lot to be excited for.
Yeah.
When it comes to
It won't become a meaningful part of the portfolio, but I will put it on the side for like the grandkids, because at some point when I'm on the moon with me and you celebrating your retirement, hopefully I'm still around by then. We'll be chilling. And we'll be like, remember that time we bought SpaceX in 2026?
All right, last two. Adobe.
Value play. Definitely a value play. Tons of share buybacks. They generate free cash flow. If they are able to show that they can maintain that 8 to 10% growth rate over the next year or two, I think this thing recovers nicely just purely based on the share buybacks and the cash flow going towards that. But if I see the growth not staying where it's supposed to be and it starts to slow down, bro, I'll dump that shit in a heartbeat.
Yeah, I think that's fair. It's really contingent on them being able to hold up the growth because at this point the multiple has been compressed
Yeah.
decisively enough.
They're getting to the point where it's all about Adobe Firefly right now. They're transitioning from they transitioned from originally a product selling business where they sold the creators the software, and then they ended up selling, like, switching up to a SaaS based business model where they're doing software as a service. Now they're switching to a hybrid model where they still have SaaS, but then they also have consumption of AI credits. So it kind of just depends. If they're able to kind of transition successfully and keep their 8 to 10% growth rate, I think this company will do well. But like I said, if they can't successfully change that business model, then I'm not holding it.
Okay, last one. And before that, real quick, Preet Patel, thank you for the super chat. See you in Chicago, Amit. Been wanting to come to one of these. Finally got my wife convinced, and my cousin decided to join too. Love you. Appreciate it. I'm putting the Chicago link in the chat. It'll be super, super fun. May 9th to see everybody. Chris, do you think you can make this one, or this one
I
can be
will
tough?
see. I did speak to the wife about Singapore, though, so I may be able to go to Singapore. I'm not so sure about Chicago. I will let you know.
If you're in Singapore, I've got family there, so we will take you around. So that'll be fun.
Yeah.
But yeah, Preet, looking forward to it and hope to see more people in Chicago. Meta, this is a big one for you. Is this the time to hunker down or give it another chance to get back to the low 500s?
Nah, just hunker down, man. Meta is Meta. They generate free cash flow. There's no replacement for Instagram, no replacement for what is it called, WhatsApp and all these other things, and they generate enough free cash flow to survive a few bad decisions by Zuckerberg in terms of investing money a little bit too carelessly. Zuck does have that ability to kind of throw money and burn shareholder value, but then also he generates a shit ton of value too. So a lot of these companies, they tend to get hit with certain challenges, and the one thing I've realized about Zuck is that he lives up to his. Whenever any problems come, he figures out how to get around them. Right now, you could see some compression, multiple compression, because of this whole thing with the lawsuits that we saw like a week ago, 2 weeks ago. But it's not, in my opinion, it's not an existential threat to Meta's business model. I think they still have 3.7 billion people on it. I think the lawsuits, in my opinion, are probably a lot more frivolous because just did you look into that, by the way, like the lawsuit?
No, I didn't look into it enough, but my gut tells me this thing is not going to repeal Section 230 or anything too crazy.
Yeah, exactly. It was so weird. It was like a 20-year-old saying like her life is bad because of social media. Like social media caused her harm. And when you like read the case, you realize that she had so many like external issues that were outside of just social media. It's like, I agree, social media is not exactly the platform that's healthiest for children, but at the end of the day, it's the responsibility of the parents to manage that, not the social media companies for creating. I mean, certain things are kind of addictive when it comes to social media, but dude, that's like saying, oh my God, I got fat because I went to this pizza restaurant because I'm going to sue them because their pizzas just taste so good. That's what caused me to get fat. Like, how does that make sense? Like they're supposed to make products that attract people. Like, so I don't know. Like, I'm a little bit sort of like biased against it. Basically because I believe that people should be allowed for freedom. Now, do I think that there should be an age restriction on social media? Probably. Maybe like 12 at least at a minimum, or 16. I think 16 is a good age. Like if I had a kid.
The age-old debate though on Meta, which is that is it a new tobacco company or is it individual choices that dictate how people engage with the platform?
Yeah, and the thing is, like, I've been using social media. I mean, I grew up with social media, right? Like, I was one of the original users of Facebook when it first came out. Back then, you had to have like a university address to get on Facebook. So I was using social media since then. I think I'm a pretty, well-developed person. I think for most people, you've had social media your entire life, right? So
yeah, I mean, look, if you give the liberty to everyone to sue Meta because of bullying, I mean, everyone can sue Meta because people are toxic online. But that's a problem with people more than it is with Meta, I feel.
Yeah, absolutely. I mean, like I said, there are probably some safeguards that I think need to be put in place just to kind of like make sure society doesn't go into this rabbit hole of I don't know, depression, because social media can get depressing at times. But to say that like the social media company itself is the one that's responsible for your dilemma, I don't know if I completely agree with that.
Okay, so you still think Meta is? I mean, I imagine you still think Meta could get hit on a drawdown, but overall, this thing should not be trading at 18 times forward earnings.
I mean, I think 18 to 25 is fair. I think 25, if they were able to kind of like show that their capex is meaningfully working for them, and then in the future their capex is actually going down rather than, or at least like maintaining rather than, growing at a more explosive rate than their free cash flow, then I think Meta could get re-rated probably like 25 forward, right? Or maybe even 30 forward. But I wouldn't necessarily right now, it sort of depends on Zuck. It depends on all the hyperscalers on how much money they're willing to throw at AI. You know, when you think about it as an investor, Amit, how much money do you think they're getting value from? Oh, you can kind of see like Amazon is getting value. You're seeing that Google is getting value, but then you've got Zuck who's like, "Hey, Alexander Wang, here's $1 billion to come join me," and then you're like, "Okay, well, what model have these guys come up with?" And they haven't really proven that out yet. So Meta, even though they've been able to use AI in their business to kind of grow their business at a solid pace, I think people are just looking for like the next big thing out of Meta. And I don't know if there's like really a next big thing just yet. Like, do you use any of Meta's AI features?
I told you the glasses are the next big thing, and they're obviously not the next big thing. I'm telling you,
I love those glasses. I don't use them nearly as much anymore, but
you
I
don't
still
use them
love
at all. Just admit it. You don't use them at all. It's okay. You can admit it.
Well, no, the reason why. Okay, so here's what I found. Okay, I want to use them in the world, but I don't want to look like a doofus with a camera on my face where everyone's looking at me like I'm spying on them.
This has been my point for 3 years. Steve doesn't get it. You're starting to get it. I think Tanner is still on the side that the glasses are. I feel like I'm on an island saying the glasses are not gonna work. They're not gonna be a thing.
It
So we have
just,
to move on from it.
I just like me as a person, when I'm wearing them, and let's say I'm at a Starbucks or whatever, and then people, because I mean, the Meta glasses are very recognizable now, right? Even if I'm not recording you or anything like that, I feel like I'm getting those stares from people like, "Bro, are you recording me?" And I'm like, "I'm not recording you," but you're getting that stare. So I don't know if it's because I just am really handsome with my glasses on, but I think it's more because people are just, kind of like, I don't know. Some people just don't like to be recorded, bro. Like, it's a big thing for some people. So
I
I don't
mean,
know
a
if
lot of people. If I'm sitting
yeah,
at a Starbucks doing my work, I don't want someone looking at me recording. So
yeah, and so I don't know if that really works too well. I still believe in the tech. I do think that there are probably some downsides that have to be worked on. To me, I think the next iteration definitely has to have a screen that's kind of like integrated in there where you can actually see things, like, and actually use the real world. Like, let's say I'm looking at a menu and it's in a different language because I went to Japan. I would love to say, Meta, tell me what I'm looking at. It takes a screenshot. I'm looking at it, translates to English, and I can just order it.
But you could
You know?
also stick your phone in front of the menu and do like this. There's not a real use case. Dude.
Shut up, bro. Why are you trying to like destroy my thesis right now?
There's not because there's not a thesis. I don't know. I think Meta's still cheap as hell, but the glasses.
It's a new thing, bro. The problem that I see with glasses, to be honest, I mean, if they are a hit, then Apple will just copy them. Just be like, here you go, eyeglasses. And they'll just destroy whatever market share that Meta's built for itself. That's it. You know which company I think is the sleeper win? Apple.
Are you gonna say Apple? Because I've been thinking of Apple more deeply over the past couple years.
Brother, I think Apple is by far the best company to buy in this current market. If you are trying to look for a low cost way to make money, yes, is the valuation a little bit higher compared to all the other mega caps? Absolutely, but it's also the safest. They're not spending a crazy money on AI capex. They're still generating tons of free cash flow, buying back a ton of shares, and you know that if AI, whatever product succeeds, Apple will just say, okay, let's integrate it and let's collect 30% fees for being in the App Store.
But okay, so I agree with all that, and I also think if they can get Siri right, they can easily charge $10 a month and print. Would you reasonably buy Apple over Microsoft here? Is the question. That's a hard one.
Yeah, it is very hard to say.
Because with Microsoft, the obvious deep value play, but Apple doesn't have the risk that Microsoft has with the cyclicality of CapEx and all that stuff, right?
I will say one thing about Apple and one thing about Microsoft. Microsoft, I think some of the Microsoft valuation was directly tied to OpenAI. And I think as the days go on and people are kind of, moving away from OpenAI, they're kind of like re-rating Microsoft as well. Like, I don't know if you feel like that, because I feel it. Like, I'm like, maybe this original valuation in Microsoft was primarily due to OpenAI. And so if OpenAI doesn't necessarily succeed, then Microsoft, I mean, what are they relying on? Copilot? Like, not exactly the greatest thing ever. So Microsoft is just kind of chilling there. Google, on the other hand, has got their TPUs and they've got Gemini, and Amazon's got AWS and Trainium chips. Like, what chips does Microsoft have? I think they're working on the Maya line, but I haven't heard nearly as much about Maya as some of the other things. Now, on the other hand, you got freaking Satya Nadella, who's an absolute fucking killer. So you're getting a CEO that's just top notch, and he's figured out ways to make money for Microsoft, and Microsoft is still growing. Now, the one thing, and I don't know if you've noticed this, I'm seeing a lot more people using Mac
for the Mac Mini stuff, right?
Not just Mac Mini, but MacBook Pros and MacBooks. Like, I was just doing some research the other day, and I was like, did you know the Mac OS, their market share has actually jumped to almost 16% of PCs now, like of computers? 16%. I
I did
think
not.
about 5 years ago, I think it was like closer to 5%. No, so the number of people using Mac is growing. And I was at Starbucks today. I took a quick picture. Dude, there's 5 people there. 4 of them were using MacBooks.
I mean, it's not hard to imagine that not happening. I mean, look, I'm doing a little bit more. I started over the weekend. I started looking at Apple more because just the basic premise that the logic for me outside of the multiple, which I don't love on Apple, is that like agents and everyone who's like Steve bought his Mac Mini to do all this OpenClaw and all this shit. Like the whole point is agents doing stuff for you.
Right.
Apple has most users. If Siri is like half as good as some of the open source stuff we're seeing today, and you would imagine Apple took 4 years to get it out there, it should be like phenomenal when it's released. Like, how is that not something that everyone who uses an iPhone uses every day? And how is it not something eventually they're willing to pay for? Plus the buybacks. I mean, this should be something that grows EPS pretty strong. And then people don't like selling Apple. Like every time it gets sold off, people come back in because it's Apple at the end of the day.
Did you see the Google thing? It's called Gemma.
Yes, on Edge.
Yeah. And I think if you think about it, like right now, that is what Gemma is on the devices. Imagine 5 years from now how crazy these models are going to be. I think that's like the next Siri, right? You're actually going to have like a giant parameter thing that runs locally on the machines. And I think that could cause a whole new wave of an upgrade cycle for Apple too, right? There's a lot of people. I mean, I just recently got I think this is the 17 Pro, right? I just got the 17 Pro. I was running
you finally upgraded after 10 years. Wow.
Yeah, I finally upgraded. I figured I needed it because like the battery on the old one was starting to go, and now that my battery on this one just lasts a lot longer, so I'm like, oh, I should have just upgraded before. So, but yeah, I mean, I'm in the Apple ecosystem, and I can't leave. But the thing is, their ecosystem's awesome. Like I love my MacBook Pro. I hate using PC now. Like the only reason why I use PC is because they gave me a computer from work, and it's a PC-based computer. Otherwise, you want to know something funny? I actually log on to my webmail and everything from my MacBook because I like using all my work stuff on my MacBook, and I just remote into my PC rather than using the PC.
That's crazy.
Yeah. So I'm just like, bro, I hate, like, I've just gotten so used to like the Mac now, and I love it. It's made of this solid aluminum. There's no like heating any on it. Like in the chat, who likes using a laptop, like a PC laptop versus a MacBook? I can tell. Like, what do you guys like?
Yeah, put in the
What's
chat.
the consensus?
I've been Mac for the past. I have an iPad in front of me, a Mac, an iPhone, another iPad. Like I'm.
And I remember when you first started streaming, you had like all these issues with like with your PC. And do you run into any of those issues with your Mac?
No, not at all.
You see what I mean? Like I just ran into issues with my computer. Why? Because it was a fucking computer. I should just get a Mac Mini and replace this piece of shit.
You know, the other thing is, the other thing about Apple, we should take some more time doing due diligence on it because people don't like it because they look at the multiple and there's a visceral reaction as soon as you mention Apple. That might be the alpha or the edge to go long on it even more. And you would think it's consensus because it trades at 30 times, but it's always traded at a premium multiple, right? That's not really the best way to look at it.
Yeah. And the other thing with Apple also is that they own the distribution, right? Anyone that owns distribution is going to win in the AI world. Like everyone can come up with whatever model that they want. But at the end of the day, who owns the most distribution endpoints? And I can't find anyone other than Google, and I can't find anyone other than Apple. You know? So among the two, those are the two main ones. So
yeah. All right, Chris, thank you so much. Thank you, everybody, for joining. I'm putting Chris's Twitter right here in the chat. I will be back tomorrow, but I think it was a decent refresher on what's going on in the world of geopolitics, private credit, and then tech stocks. And we will see tomorrow night, 8 p.m., based on this Trump deadline, what ends up happening with the war.
yeah, and sorry everyone, I'll fix my my PC. Hopefully that it works next time, or I'll replace it with a Mac Mini or something.
How old are you in this picture? Is this like 2010 or something?
Yeah, I think like 2010, 2011.
Okay, because the comments have been great about this.
What?
Just this picture that we're looking at. It's
you know what you know what's one of the weirdest well, not weird, but one of the comments I got, they're like, so when I was at the LA meetup, they're like, Chris, you're good looking. I was like, thank you. I was like, man, I don't know whether to be like, you know, like, nah, I guess I am okay looking. Thank you. You know, nice to meet you too.
Chris had an absolute freaking what do you call it? Crowd around him. This picture is great. You were talking to a bunch of people. They were definitely very excited to get your thoughts.
Yeah.
Super fun. Hopefully you can make Chicago, if not Singapore. But yeah, it was fun. It was cool stuff. And now we just got to wait until Tuesday tomorrow and see where this goes.
I hope everyone in the chat, you guys got value out of the conversation that me and Amit had during the what is it called, the LA meetup and stuff. And it was great meeting all you guys. Some of you guys are super chill. I wish I was feeling a little bit better so I could have hung out with you like during the daytime.
Yeah, Chris ended up actually getting sick for a couple of days, which kind of messed stuff up a little bit. But overall, I mean, you got through the meetup. It was a good thing.
Yep. All right, everyone. Take care. I'm going.
All right, Chris. That is it for us today. Guys, I think we need to look at Apple a little bit more. I started thinking about this, and you know, I'm one of the biggest Apple bears in the context of just like the product rollout over the past couple of years has been abysmal. But I also have a lot of sympathy for Apple because at the end of the day, Apple's freaking Apple. Like you know, there's not that much more innovation you can put on top of the iPhone after putting out, you know, so many amazing versions of it. And so they have to raise the bar. It's hard to do, but until then, if they can get Siri right and monetize it, like there's no capex. They spent $12 billion on capex last year. Google's going to spend 150. I mean, there's just so much room for them to gain momentum on. And maybe that's reasonable. Did we talk about the Broadcom deal? We did. Is Broadcom still pumping? As they had that deal after hours, Broadcom is, where are we at? Up 3%, I think. 2.85. Yeah, I mean, it's a decent reaction. Obviously, that spread or that level on Broadcom was there last week as well. So Broadcom, like NVIDIA, kind of been stuck in a rage. I do not think the Broadcom deal is bearish NVIDIA by any sense, by the way. Like, if anything, it just means there's a lot more demand in the entire industry, which is obviously very good. This is the Broadcom coverage. Do I have it right here? Let me see if I do. And it just means that Google's willing to spend a lot more. And if they're willing to keep spending, then obviously that should be good for the entire sector. Where is that coverage? Let's see if I have it. Let me see if I can get it here. Apple is 3.5 gigawatts. Broadcom, Google, and Anthropic. And it looks like Anthropic needs a lot more compute. At least that continues to be the story we hear. Okay, I do not have the coverage on that, but that is the core deal. We'll obviously talk a lot more about it tomorrow as well. Yeah, Broadcom was a $420 stock, so this thing has been hit pretty badly since those levels. But a deal like this is not the worst thing for them to get. Yeah, Windows run better on a Mac. I mean, I do not like the valuation on Apple. I think it makes absolutely no sense if you just look at it on a pure numerical basis, given the growth rate. But Wall Street doesn't sell this stock. Every time it does get sold off, people are ready to just buy it back up and buy it back up quickly. Like there was one point last year where it was struggling, and then it just ended up kind of, moving forward from there. Artemis, they're still streaming live as well. That's going across the moon. Those are some of the updates. You had to admit your Apple post had a typo in it. Where is the typo? It was like 10 words. Where could I possibly have made a typo? Oh, there's a typo. Dude, I hate typos so badly. All right, I'm going to delete this and repost it. Where is it? Right here. It's what if Apple is the actually one. This is what I get for trying to tweet while streaming. Sounds like I'm retarded. What if Apple is the actually one of the best they are? Apple is always digging a moat. Heard they're cornering the memory market to take more market share in this crisis. I did see that report last week as well. Apple is definitely going to be able to make sure they, secure the upside here in the context of memory. Is this why I always click your notification is deleted? Yes. If you have notifications on from a Twitter account and I post something and then you see it says deleted, it's because I made a typo and I hate making a typo grammatically or spelling wise. And then I just freaking delete it. Like I can't stand seeing typos. Oh, I think I have the coverage right here. I think I have the coverage. Is this it? No. There's an OpenAI update, but not the Broadcom one. Let's take a look at this real quick, and then we'll end it out. But I don't have the Broadcom one here.
Elon Musk, who was an early backer and co-founder of OpenAI. We also are hearing about Meta CEO Mark Zuckerberg. In this letter, company alleges that Musk has been working to what they say was undermining OpenAI through various attacks on the company, including coordinating his efforts with Mark Zuckerberg. I just got off the phone with an executive at OpenAI, Chris Lahane. He's the head of global affairs over there, calls this possible collusion between Musk and Zuckerberg. He pointed to recent text messages that became public through this lawsuit's discovery process. Those were between Zuckerberg and Musk. Musk, in these, asks Mark Zuckerberg for his help in trying to acquire OpenAI's nonprofit arm. Musk, according to Lahane, is potentially, in quote, cahoots with Zuckerberg. He says the focus here was on trying to seize the $100 billion nonprofit, says that Musk is seeking to obtain the nonprofit for his own personal gain. He also pointed to some new reporting in the New Yorker over the weekend, says that Musk, in his words, conducted extensive opposition research about Sam Altman. The New Yorker really details this, including tracking flights, other movement, and also they say.
Okay, another lawsuit for OpenAI. That's funny. They're asking the California Attorney General to investigate Zuck and Musk's effort to undermine the company. What's really interesting about this is that Zuckerberg sent an email to Mark a year ago saying, "Hey, do you want to take over OpenAI with me?" And obviously, Zuck's denied it, or like he didn't, try to take it over with him. But the fact that Elon, who is not a fan of Zuck's, yeah, this is December 13th, 2024, where they are both trying to go after OpenAI together. So, I mean, they're definitely not fans of OpenAI. And quite frankly, OpenAI takes time away from Facebook because, I mean, if you're using Facebook, you're not using OpenAI. If you're using ChatGPT, you're not using Facebook. And then obviously Elon, does not like that OpenAI has become a profitable company. All right, so that is pretty much it. The biggest headline after hours was this UNH update. That's up 9%. Same thing with Broadcom. That's up 3% in the Google deal with Anthropic. We are going to see tomorrow, Tuesday, 8 p.m. I agree with Chris. It's just not easy to invest until we have a little bit more clarity. And I'm going to keep doing some due diligence on Apple and see if it makes sense. You have to get over the valuation to see the broader story, which shouldn't be that hard to do. But then again, in this market, it's one of those things where it's like the valuation should matter. But also, the fact that Apple's only down 4%, it's the best performing Mag 7, which is crazy. I think that alone has to be some level of warranting for how the market doesn't interpret them as being the sort of cyclical CapEx up and down types of businesses that the other Mag 6 are a part of. So you got Apple right there, down about 4%. We'll take a look at that. And then tomorrow, 8 p.m., I mean, it would not surprise me if by 8 a.m., Trump re-extends the deadline that he had for 8 p.m. We'll see. Futures so far are not upset about anything that Trump said today, even though it sounded like he was escalating. But as of now, if that's not the interpretation of it and it's priced in, then maybe we're going back up. Yeah, California, 5 p.m. time. We'll know what ends up happening here. Why did the SPY trade such low volumes? Honestly, my gut tells me people are waiting for tomorrow, which could be the reason why the S&P move today is fake. Because you have such low, I mean, this is the lowest volume in over a year. That doesn't just randomly happen. That happens because people are obviously sitting on the sidelines. And yeah, you might have had more buyers than sellers today, but you also might have those buyers, S&P up after hours, that are assuming there's going to be a taco. And if they're wrong, then the people who held out today by not buying or selling or doing any trading activity, they're probably going to come in tomorrow and try to benefit off the volatility. So we'll see tomorrow how this ultimately ends up playing out. All right, that is it for me. Daily recaps are back. We will have a daily recap coming out in 2 hours. I know it's been anything but daily this year. It's one of those episodes where I have a pretty extensive work ethic. Like, I show up, I work, I like working. I wouldn't classify myself as lazy, but that show, those 20 minutes, finding the time to record it every day, it's just like something always gets in the way. So I think I've kind of developed a little bit of a new schedule, and that will be out later today. And the goal is Monday through Thursday to put it out. No traveling this month, so it should be a lot easier to make it happen. And for those that don't watch the market open, market close, those 20 minutes should hopefully get people caught up on what's happening. The championship game is not today, right? For NCAA? Is that today? That's next week. Oh, it's today. Oh, the finals are today? UConn versus Michigan, 8:50. Oh, this is exciting. I am, I'll do a poll real quick, then we'll end it out here. I want the freaking Huskies to win because Dan Hurley, I mean, he deserves to get his, 8th championship? Apparently they won in 2023 and 2024, so this guy knows how to win. And the way they got here, by the way, 72% of you guys said Claude over GPT. Yeah, you just saved my night, 100%. Who wins, UConn or Michigan? Dude, the fact that UConn got here in the way that they did through that 3 that they made last second, like they've got to finish off the season this way. They've got to win the championship given how they got here. Jason will be on tomorrow. Yes, we will go through TT with Jason tomorrow. Why did I think it was in the middle of April? Okay, so that's going to be crazy tonight. I feel so bad for the Lakers, dude. Luka's out. Austin Reeves is out. Now, granted, I don't think anyone thought they were going to really win the championship. But, like, Luka and Austin Reeves being out kind of sucks for the Lakers. So, if LeBron can get them to the first round without those two, I mean, it would be incredible, but it's obviously not going to be easy to get there. Okay, I was about to leave, but Cactus is now sending the 10-point proposal from Iran. Kane, you sent the freaking NCAA thing, which got me to stay. And now I'm getting this 10-point proposal. All right, here we go. Here are the 10 points. Number 1, permanent end to the war, no temporary ceasefire. Number 2, no future attacks on Iran with U.S. and Israeli guarantees. Number 3, stop Israeli strikes on Hezbollah and Lebanon. Number 4, lift all sanctions. That shit's not happening. Number 5, end regional fighting. Number 6, we will reopen the Strait of Hormuz. Number 7, we will allow safe passage through the Strait of Hormuz. Number 8, we will charge $2 million per ship in transit fees instead of direct compensation, which was rumored already. Number 9, we will split the fees with Oman. That's why you had the headline last week about Oman and Iran with the draft together. Number 10, use Iran's share for reconstruction to rebuild damaged infrastructure. Okay, so the Iranians want all the money by removing the sanctions, which to an extent will happen. I don't know if we're going to remove all the sanctions. I agree with Chris, though. Like, some level of sanction removal would be a good thing. But there's no way in hell Trump's going to remove the sanctions if the Iranians don't open up the strait at the same time. Like, he's definitely not going to want to give them tons of money. Also, if he doesn't get a guarantee they're going to denuclearize, I mean, you're going to have people thinking Trump's crazy to give them hundreds of billions of dollars a year in revenue by opening up the sanctions and then just using that money to proliferate nukes, right? Like, so you're going to need a better guarantee if they do get the sanctions relief. But there is a world in which I think Trump would be open to that. They would just need to actually commit to giving up the nukes. And then the $2 million per ship, I don't think Trump's going to be that upset about that, because if the fees are going to be able to rebuild Iran's damaged infrastructure, well, maybe he would think the sanctions are enough to rebuild the infrastructure, so you don't need to put this additional $2 million fee per ship, which obviously would still keep oil prices elevated, even if it's not at 110. But some of these demands feel a little aggressive. I mean, no future attacks obviously is not that crazy. Permanent end to the war, that's not that crazy. I'm sure Trump wants to end it as well. But the sanctions, the $2 million per ship, and then no acknowledgement of getting rid of the nukes. This is from the New York Times, by the way. The New York Times put this out. That is where the proposal might end up. Nothing about nukes. Nothing at all. Nothing at all. Just a full-on end to the war, reopening of the strait, and getting rid of sanctions. They might as well be asking for a ride on the Artemis rocket. Well, the good thing is this is a negotiation, right? You get your best side, they get their best side, and you meet somewhere in the middle. So at least they're talking. I think that's why the markets are green today, that and low volume, but at least they're talking. White House press pool, Trump is set to have dinner with the U.S. ambassador to India on Tuesday, 1 hour before his deadline for Iran to make a deal. Okay, so an hour before he's supposed to make a deal, he will be talking to the ambassador. S&P is up after hours. Futures like it. It's a very small candle, but nonetheless, they do like it. NVIDIA flat. Q's flat. Where's crude after hours? Crude is flat as well. So not a major reaction. Whose demands are we getting? That's a great question. I don't know. So the New York Times, 2 senior Iranian officials speaking on the condition of anonymity to discuss the sensitive negotiations suggest that the proposal included a guarantee that Iran would not be attacked again. In return, Iran would lift the blockade. Iran would also impose a fee of $2 million. So it's 2 anonymous Iranian officials. I would imagine they don't represent the IGRC, but they are, I guess, the counterparty that we are negotiating with. I still don't think it's enough to buy. Like, first of all, we've all bought enough from end of last year, early January, February. So it's not like people haven't bought the dip. I still think until you get real confirmation, it's tough to buy this stuff, man. It really is. Because you want to feel good that everything's done. There's negotiations. We're going back to, I mean, we had a 15-point New York Times proposal 2 weeks ago, which made everyone feel good. Remember, the S&P spiked after hours. Sam joined the show. Everyone was happy. And then, what was it, 6 days later or 7 days later, you have the freaking Monday bottom because of the market's just having new headlines that denied all of those 15-point proposals. So none of this stuff can be treated as truth intrinsically, which is once again why it's hard to get super excited to buy the dip here. But obviously, names have been sold off enough where it's also not crazy to take a bite. It should not feel good to buy or sell. That's when you make money. Look, I agree with that. Obviously, if anyone knows how to buy the dip, it's retail as an investing community. The problem is we've been buying the dip for the past 7 months. Like, we've been on this downturn since October 10th. So when it comes to net new capital being deployed, I would not mind buying the S&P at 685 instead of 658, with the understanding that we're probably not going to revisit that 650 level again, versus buying it at 658 and then taking a 50-50 chance, or a less than 50-50 chance, on going back to 630. There's only so much capital people have, right? You want to have a little bit more certainty here. It was also weird that VG was up on the day, Chevron was up on the day, the S&P was up. Like, it just felt like a fake day. And that volume stat definitely signals how fake it could have been, because the lowest volume in over a year is not what we should be seeing in the equity markets. If anything, it just means people are holding back until they get more data. Buffett is still holding cash, $350 billion. $358 billion. And even Buffett last week on the interview, he said this decline is nothing. And I don't necessarily agree with that like this decline is absolutely nothing. I do think it is relative to the earnings growth we've been putting up, the decline is bad. Is it nothing in the conventional sense? Yes, obviously it's not even 10% pullback. But Buffett, based on the tone of that interview, they bought $17 billion in treasuries last week. They're getting a juicy 4.5% return. it doesn't seem like they're going to get excited until we see 5,500 on the S&P to really start deploying capital, which I get because they have a lot of money. But, do we get that bad is the bigger question. Why is Buffett holding cash? What does he know that we don't? Well, I would say to take that with a grain of salt, because again, Buffett's held cash for the past 5 years. Right now, they've deployed a little bit into Google and UNH and Apple and Chubb Limited and all that stuff, but they haven't really made that $30-40 billion bet on a company like they did 20, 30 years ago. And I think they just think with the size of capital, they need to wait until there is that massive opportunity, which did exist in Liberation Day, and they didn't really buy. And ever since then, 2022 was the last time that stocks were really, really dirt cheap, maybe like end of or mid 2023 as well. So I don't know. They also don't buy tech, right? That's just not their style. They've started to buy a little bit of tech, but if they're not massively buying tech, then that cash will continue to stay on the sidelines. Also, they have been buying a lot of Japanese insurance. Yeah, that's fair. The Japanese markets have been a lot more interesting to them over the past few years. All right, 60% of you say Michigan. Wow, I don't even know anything about Michigan. All I know is I want UConn to complete the season with a win. But it seems like the majority of you guys say Michigan. Right, we'll find out later today. Again, thank everybody for joining. Daily Recap will be out in a couple hours. And we'll be back tomorrow morning, and we will see what this deadline looks like. Quite frankly, Technical Tuesday will probably go until like 7 p.m. tomorrow. So 8 p.m. is the deadline. I think we'll get an update before 8 p.m., but if we don't, then we'll see what happens at 8 p.m. and if things get as ugly as people think they could possibly get. All right. Thank you, everybody. Appreciate it. I will see you guys tomorrow on the Market Open. Bye, everybody. Have a good one.